Joins us to talk about being a small business owner and a descendant of Black Wall Street.
And then I mentioned earnings. Take-Two Interactive, Tenet Healthcare, and Amgen among those reporting after the close. Let's get to it, though. Let's get to the Market Drivers Report. Let's set the Business Week agenda on this Monday. Kriti Gupta, she's in the house in our Interactive Broker studio. She's markets correspondent at Bloomberg News. Vince Signorella, global macro strategist at Bloomberg News. He contributes to the Macro Squawk Desk. And you can get that at SQUA Go on your Launchpad. Kriti, up, down, up, down.
Yeah, pretty much.
Broken record, volatility.
It's killing me because I wish something more exciting would happen on a macro front. But all the excitement's really in that merger Monday.
Wait a minute.
news, right?
We've had quite an exciting 2022.
I know.
So, let's have a little peace and calm.
You want a break,
right?
Carol?
I am okay with a break.
Well, you're getting one today on the macro front at least. But then you have a ton of merger Monday deals. Peloton, like you guys were talking about, Apple, Nike, Amazon, and I think Disney was thrown in there as well. It was just like a month ago that you had activist Blackwell's coming out.
What company isn't thrown in this?
I mean, that's
well, these are
very
the guys
true.
who have some deep pockets, right?
Yeah,
There's a great story on the terminal among the most read, but about some of those big tech names and how deep their pockets are, and they can do some deals.
Well, big tech, big cash, right? Big cash reserves, and I think a lot of people are waiting to see where they're going to spend their money. And we saw Microsoft go after Activision. We're waiting for the equivalent on Apple and Amazon. I think we can say Meta is probably having its own issues at the moment, but for Apple and Amazon, at least that's a big one. And Disney,
it's issues.
Yeah. Well, let's go over that one. Yeah. But on the other front, you do also have airline deals as well, which is another big piece of the equation. Frontier looking to acquire, what is it? Spirit Airlines.
Spirit, I know.
I don't know. I just lost my wording there.
Well, they're not the airlines that, unless you're in that space over there, right, in that part of the country, you don't often fly them.
Yeah.
Or sometimes you use it as a connector or something, right?
Super, ultra low cost carriers. But I think what's important here is on both deals, you could see some antitrust. And that's something that I don't think we've talked about really since the election of 2020. Certainly not something that's priced into the markets, but it's something that is kind of hovering in the background as we talk about what's next for big tech.
Yeah, I completely agree with the antitrust front. And we'll see what happens with Microsoft and Activision. If they get the green light, that could lead other companies to say, okay, wait a second, we could go buy a Peloton or something. Hey, Vince Signorella, come on in here. Give us an idea of what you're keeping an eye on today. What are you hearing from traders?
I think we're just basically seeing traders just take a deep breath ahead of what's going to be the key data and the market driver, I think, for the near term, which is U.S. inflation data on Thursday. We're looking for another north of 7% print, which takes us back to the hottest inflation we've had since the early 80s, which some of us remember.
Yeah. Well, but okay. Do you feel like it's touch and go, Vince? I mean, what I love about, I do this to you all the time.
Yeah, what?
It's not that you're old, but you've seen a lot of cycles, right? And we know that things.
You can say it, Carol. He's old. It's fine.
He's not. He's seasoned like a great bottle of wine.
Yes, I am old.
But I mean, cycles, right? Just like markets. Markets go up, markets go down. Inflation can go up, inflation go down. We've just been spoiled by a really low rate environment and inflationary environment for a long time. Can we fall back if we start to see supply-demand imbalances really correct?
You know what? I think what people need to keep in mind is longer term and over time. Obviously, the fixed income market doesn't like higher interest rates, at least as they, until they stabilize at some level. But equity markets tend to do okay with higher rates. As long as inflation isn't rampant and as long as wages do keep up somewhat with inflation, you can still continue to see earnings increase, and then you continue to see stock prices increase. It only gets a little out of whack when inflation starts to get ahead of where the consumer is in terms of like not keeping pace with wages, and then you basically see people pull back, and then of course earnings pull back. But the market's resilient. The market can handle the higher rates.
Judy?
I would agree, but especially because I think we've been
Tim and I are already tired.
Well, you know what I'm thinking?
We looked at Kriti and we're like,
because
no.
I'm thinking of Kriti's story that she sent for later, the Amazon raising wages when I hear Vince. And they're raising wages from $160,000 for the base to what, Kriti?
Yeah, I don't remember the exact number. Well, there you go.
Yeah.
But it's
talk about wage inflation.
I was really excited about seeing the story actually, and I'm just going to tease this, but I saw a commercial for Amazon. It wasn't actually advertising its products or shipping. It was advertising hiring.
Yeah, I see those all the time.
Those those are crazy. I've never seen commercials to actually hire someone before.
Those are for the fulfillment centers.
Right.
Yeah.
It was like,
They're
here we
having
have
trouble
$50 an
attracting
hour,
talent.
healthcare, et cetera.
Yeah.
But to go to the point that Vince was talking about on yields, I think what's interesting is also what you're seeing in Europe. We don't really talk about Europe a ton in the afternoon, but this morning we really should, because, I mean, Vince knows this better than anyone. Italian spreads, Greek spreads have just shot up because of all of this kind of hawkish pivot.
Yeah, we're watching. What do you make of that? Just quickly, Vince, just got about 10 seconds.
Well, I think you see European yields are significantly lower than U.S. yields, and the danger for Europe is some serious catch-up to play, especially when you look at German bonds at 20 basis points for the 10-year. So whatever you see in U.S., I would think Europe's going to feel the pain a little bit more.
All right, you guys, thank you so much. Kriti Gupta, she'll be back later on with that teased chart of the day, and Vince Signorella, our global macro strategist at Bloomberg News.
Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. Today's number is 1.
It is 1. 15-year-old Russian figure skater Kamila Valieva became the first woman to land a quad at the Olympics. She landed 2, in fact. It helped the Russians cap a dominant run to the gold medal in the team event. The U.S. earned the silver medal while Japan clinched the bronze. Did I get a medal for how I pronounced it?
You did. I stayed up late watching the Olympics. That's going to be a bad thing. I'm going to keep doing it. Yeah, it's bad.
Really sweet.
Yeah, but I'm going to get no sleep for the next, 2 weeks?
You'll feel like me today.
No, that's true.
All right, let's get to world and national news. Nancy Lyons, take it away.
Thanks, Carol. There may be no point in taking an Omicron-specific booster shot. Bloomberg's Amy Morris has details from the latest research from Bloomberg Intelligence.
The data show similar outcomes of an Omicron-specific vaccine versus current shots. Studies show Moderna's Omicron-specific booster doesn't introduce antibody levels any better than the current vaccine. And this is the second time this has been reported, with previous data from Moderna's studies with a beta variant-specific vaccine showing the same thing. Analysis shows an mRNA booster is just as good as a new Omicron-specific shot. Research by BioNTech showed similar results. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is retooling his economic message with his Build Back Better plan stalled on Capitol Hill. Bloomberg Government's Emily Wilkins reports his advisors want to focus less on inflation and COVID politics and more on growth in wages, union jobs, and domestic manufacturing.
This is sort of a strategy that Biden's undertaking as many Americans are suffering with high inflation, with supply chain backlogs. This is Biden really trying to address his economic record and address some of the financial pain that Americans are feeling on a day-to-day basis.
Again, Bloomberg Government's Emily Wilkins. The start of the Major League Baseball season, 24 days away. Still no new labor deal. MLB owners locked out players back in December when both sides failed to agree to terms. Players declined a request from owners on Friday to bring in a third party to help mediate their differences. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We're going to talk about this a little bit more with Kriti Gupta a little bit later on because she's been watching this, but we got to get to it because this story is just unbelievable, but a sign of the times.
Yeah, so what I thought of when Kriti was talking about wage inflation, because I saw this story hit the Bloomberg earlier in the day about Amazon raising its base salary cap to $350,000, that up from $160,000. The company saying in a memo that has been reviewed by Bloomberg, quote, "This past year has seen a particularly competitive labor market, and in doing a thorough analysis of various options, weighing the economics of our business and the need to remain competitive for attracting and retaining top talent, we decided to make meaningfully bigger increases to our compensation levels than we do in a typical year."
And this is white-collar workers.
Yeah, these are not warehouse workers. Warehouse workers, as Spencer Sober points out in his piece that talks about this, they're paid at least $15 an hour. In September, the company said it had raised average wages for these employees to $18 an hour.
Amazon also, with this pay bump for white-collar jobs, said it was also increasing the compensation ranges of most jobs globally and is changing the timing of stock awards to align with promotions. You know, it's a tune we've been singing a lot lately, and that is just employers struggling to hire and retain workers as of late. Amazon has long relied on stock awards, betting it can entice workers to take positions even if the base pay is low. But the stock languished last year, gaining just about 2.5%, while the S&P jumped, as you know, 27%. And so that strategy was not going to do it anymore.
So in order to attract those workers who previously were attracted by stock options, the company has to increase base pay in case the stock doesn't go higher.
The other thing is, listen, the company, if it doesn't have the workers, it's going to eventually impact potentially, right, the bottom line. Media reports indicate the turnover rate inside of Amazon has reached crisis levels, and a record 50 vice presidents departed last year. So we're not talking about what's going on in logistics, where I think there is a fair amount of turnover,
a lot of
right?
Turnover in logistics, yeah.
Yeah, but this is senior management who may be working on strategy and long-term growth initiatives or what have you. So anyway, we'll continue to dig deeper into this one.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Spike higher right now for the Dow Jones Industrial Average. Best level of the day, up 150 now. That is a gain of 0.4%. We do have the S&P higher by 6 points, up by 0.1%. NASDAQ back on the plus side now, has been swinging between gains and losses. Very choppy session. NASDAQ little changed, higher by 1 point. Investors are assessing the outlook for monetary policy ahead of key inflation data later in the week. Treasury yields are pulling back from session highs. Right now we do have the 10-year yield 1.91%. Spot gold is up $13 the ounce at $18.21, up 7 tenths. And West Texas Intermediate crude falling 1.1%, 91.33 for a barrel of WTI. So again, recapping, the Dow, the S&P, NASDAQ all advancing, little change. That's the key takeaway with the S&P up 6 right now, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic, live in our Interactive Brokers studio on this Monday. I think one of the big headlines, I was actually talking with a doctor this morning. She's got kids, 12 and 10-year-olds, and she said, hey, and she's in New Jersey. She's like, New Jersey Governor Phil Murphy, among those, also Delaware Governor John Carney saying they were lifting the requirements that school children wear masks, and she was like, this is great.
Last week, we started to see the easing of restrictions around many European countries. This week, we're starting to see them around many U.S. states.
Right. It's definitely moving in that direction. So let's get back to someone who we have reached out before when it comes to COVID and the pandemic. Dr. Leyla Fayanju is Doctor of Medicine and Medical Director at the publicly traded Oak Street Health. It's a network of primary care centers really dealing with Medicare patients. It's got a market cap of about $3.8 billion. And Dr. Fayanju joining us on the phone from Cleveland, Ohio. Doctor, good to have you back here on Bloomberg. How are you, and what are you seeing when it comes to the pandemic?
It's good to be back. In terms of what we're seeing cases coming down. Here in Ohio, here at our centers throughout Ohio, we're seeing fewer cases, but we're still not out of the woods entirely. I've been encouraged by seeing the number of cases decreasing in all the counties in which we operate here in Ohio. That includes Cuyahoga County, which at one point had the third highest case per 100,000 number across the United States. So we've come a long way since the peak of things back in the middle of January. But since then, we've seen steady, consistent declines across all states. Most states are seeing double-digit declines in terms of the number of new cases. Now, one thing I would point out, though, is that deaths continue to be at a fairly high clip. We're seeing deaths of close to 2,600 deaths per day. And that's a daily average as of yesterday, which has been reported by the CDC and the New York Times. So we're still not out of the woods. There's still a lot of work that we need to do. Vaccine rates are still only at 64%. Fully vaccinated, it only stands at 64%, with folks with at least one dose at only 75%. So we have a lot of work to do.
Don't you feel like we've topped out, though? Does it feel like we've topped out at this point?
Like how much further can we go with vaccines?
Right. Like if you haven't done it by now where we've been in, right? Like do you really think anybody's going to, I don't know, or do you really think much more will step up?
Well, at Oak Street, we're making it a point of making sure that we could do more point-of-care vaccinations. I think part of what has maybe led to the plateauing of the number of fully vaccinated people may be the fact that, for the most part, it's still a little bit cumbersome scheduling and arranging a vaccine. But if you can do more vaccines at the point of care, I think we're a long ways away from where we were like a year ago, where you needed a lot of infrastructure and a lot of resources in order just to stand up vaccine clinics, which were standalone vaccine centers run by National Guard units and public health authorities. We're far away from that. We have plenty of vaccine supply in the market. You can get vaccinated at local pharmacies. You can get vaccinated at a lot of clinics and a lot of primary care ambulatory settings. So if we leverage that effectively, we can definitely get some of these numbers up. But there is some merit to that point that we're probably at around a plateau right now, 65, 66%.
Dr. Fayanju, I'm wondering what signal you need in order to say we're out of the woods. What's that moment going to be?
I would need to see considerably lower hospitalization rates and persistently lower hospitalization rates combined by substantially lower numbers of deaths. We're still seeing an 18% increase on a 14-day range in deaths. We are 18% up over the last 14 days in terms of deaths. We're down with hospitalizations, we're down with cases, we're down and in all of those areas. But in order to really truly become for this to become truly an endemic virus, you need to see both the decrease in deaths and decrease in hospitalization, even if the virus is still widely circulating.
You know, it's funny. I still think people are continuing to have the conversation, one that Tim and I talked about last Friday with Dr. Ian Losbader over at NYU Langone, and I had it with family over the weekend of like, I don't get it. My husband had symptoms, COVID, and I didn't get it. We live in the same house. There's no way we weren't breathing the same air. Is this just a reminder that everybody's got a different immunity system and different abilities? I mean, and different genetics that affect how we are impacted, even with amid a pandemic.
That's absolutely right. You know, everybody is different. You know, we see this in households, just as you described, where one family member who's clearly interacting with all the other members of the family is infected, but others never test positive. Now, it's very likely that other family member who didn't get tested positive may still have contracted the virus, but maybe never became symptomatic. But still, I think this is just a reminder about how variable and how quickly moving and changing this entire experience has been, not just for us in the clinical and the medical profession, but how we've all experienced this as families.
Doctor, last question, kids and masks. We see New Jersey and also the governor of Delaware saying that they're lifting the requirements that school children wear masks. Is this the right move?
It's a tough call. I'm originally from New Jersey, even though I live here in Ohio now. I would still consider mask wearing for kids still a good idea especially until we get all kids vaccinated. We just have not reached the levels of vaccination that I think we need amongst children. And while people have said, the virus doesn't really affect children, it in fact does affect a lot of children. We've seen thousands of deaths from children amongst children. We need to keep our kids safe. And also, I think wearing a mask is a small ask in order to keep our schools open. You know, I just saw a clip of the Canadian women's national team playing hockey this morning at the Olympics. All the women wearing N95 masks, and they beat the Russian team 6-1. So we can clearly keep wearing masks, and we can still be fine. So if a bunch of Canadian hockey players can do it, so can we.
We got to run. Thank you so much. Really appreciate it, Doctor. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Are you ready to just throw me out of the studio?
No, I would never throw you out of the studio. But it's
Carol's just coming to my rescue.
we cover each other. We have each other's backs, which is why this works so well. We've had a fair amount of deal activity already this year. Some big things, Microsoft and Activision. And today, the prospect of a deal, maybe Peloton, but also one done in the airline space.
Yeah, we're talking Spirit and Frontier.
Yeah.
Is it a match made in, I don't know, there's some sort of joke here about like cheap tickets or, not that much space on the plane. I don't know. There's something there.
There's probably, wait till the comedians get hold of it. All right, first up, though, let's get a hold of Charlie Pellet, get a check on that trading day. Hey, Charlie.
Well, hello there. Indeed, we do have Frontier and Spirit flying United. They've got the urge to merge here with Frontier Group Holdings. Look at the ticker on this company, ULCC, ultra low-cost carrier, up by 4 percentage points right now. The big winner, though, on word of that deal, Spirit surging now by 17.7%. Yes, we've got more on the topic for you coming up here on Bloomberg. Stocks edging higher, choppy trading. Investors are assessing the outlook for monetary policy ahead of key inflation data later on this week. S&P up by 11, a gain there of 0.3%. We've got the Dow up 168, higher by 0.5, and NASDAQ up 31, a gain there of 0.2%. 10-year yield 1.91%, 10-year down 1/32. Spot gold up 0.8%, 18.22 the ounce. West Texas Intermediate crude down 1.1%, 91.27 a barrel right now on West Texas Intermediate crude. New Jersey Governor Phil Murphy is lifting his state's controversial school mask mandate as the Omicron variant surge abates. That move will take effect on March 7th. Australia will allow double vaccinated visa holders to enter the country from February 21st, ending about 2 years of strict international border controls. Dr. Joshua Sharfstein is vice dean of the Johns Hopkins Bloomberg School of Public Health. He says, yes, these easings do make sense.
I do think that there's, room to move, and I think we are going to see over the next couple months that it's going to be okay to slowly back down on certain measures that we've been living with. 2022 is different than 2021, but it doesn't mean we're in 2019.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we check for you on a regular basis at this time. Pfizer up 0.8%. Its German partner BioNTech, its ADRs down 1.2%. AstraZeneca's, its ADRs up 1.6%. Moderna down 0.1%. J&J Johnson & Johnson down by 0.3%. Recapping choppy session, the Dow, the S&P, NASDAQ all solidly in the green right now with the S&P up 12. That is a gain of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, urge to merge, Frontier Group apparently feeling it and agreeing to buy Spirit Airlines, as Charlie mentioned, $2.9 billion. It's a cash and stock deal. So basically what you're getting is these two ultra low cost carriers coming together, and this is really tapping into U.S. leisure travel. This isn't necessarily the business traveler.
No, pent-up demand for that leisure travel, especially at the bargain range. Let's talk to Peter McNally, Global Sector Lead for Industrials at Third Bridge Group. He joins us on the phone from New York City. Peter, to what extent is this about taking advantage of a pent-up demand for travel that we think is going to happen after Omicron versus actually being able to take on the big players, the Southwest, the United, the Deltas, and the Americans?
Well, it's good to be here. I think if there's one thing we learned in 2021 about airlines is that people do want to travel. As soon as they get vaccinated and markets open, they're booking tickets and they're getting on flights. And some things then end up beyond control where borders close and things like that. And that stunts demand, but that there is that urge to travel. But right now, today, the number one issue facing the airline industry is inflation. And, while the headline numbers in the economy are 7%, your average airline on a unit basis these days is mid-teens, or looking at the case of Southwest, they're seeing unit inflation up 20 to 24% in the first quarter, and that's excluding fuel. So I think airlines merging and this
this Frontier Spirit deal is a little bit different because most of the synergy is actually coming from the revenue side, but $500 million in synergy that they're talking about, the merged revenues for these companies is going to be $9 billion in 2023. So you're talking north of 500 basis points of margin expansion, which could go a really, really long way to offset inflation that everyone else is seeing in the industry.
So I remember years ago, like the beginning of my career, doing that airline piece about all the airlines, like how the industry, everybody starts it. This is remember when Trump had an airline and they were just names that are no longer here because you see growth and then you see consolidation and weaker players being taken out. I guess my question is, does a deal like this mean somebody else has to link up, or is this just kind of an isolated case because these are two very specific types of carriers?
Well, I think it's hard to say, and I'll roll back to 2020, actually, and if there's something that Third Bridge learned that year was that capital was always made available to this industry. And it wasn't just from the government, is that whether it was debt markets or equity markets, this industry was able to raise money, and there were no bankruptcies. And in fact, last year, we saw some IPOs that people are willing to actually start airlines, bring them to the market. And, these guys both have, a private equity background. And it'll be hard to say what the other, players in the industry are. But I think for Spirit here, what their shareholders are getting out of this is actually the ability to delever faster than they would otherwise. I mean, lots of these airlines did take on debt. Debt capital markets were open, as we said. But by accepting Frontier stock in this merged deal, those debt levels will come down faster than they would otherwise.
Okay, well, we've talked about what it means for shareholders, and what it means for the company. What about for customers? What does this mean for customers?
Well, the pitch, here is that they'll get more choice. That they're not. The idea is that they're going to grow. And they're going to have 350 planes between them on order. It's going to be about 5% of the Airbus order book, believe it or not. And they're going to give, a run to the major carriers in lots of different markets. So they're talking about 10,000 jobs, growing, over it. So, the idea is that they're not going to be, slashing options, but they're going to be providing more options to customers, and that's how they're going to try and get this past the DOJ and the Department of Transportation, for approval, which will be required.
Hey, listen, we got to run. Just want to mention that Frontier Group Holdings up about 4%, and you've got Spirit up almost 6% in today's trade. Peter, thank you so much. Peter McNally, he's Global Sector Lead for Industrials at Third Bridge Group on the phone in New York City.
More competition, maybe?
I guess. It seems just like a very specific type of deal.
It does, very neat. Like, I won't say niche, but it's definitely, it's the bargain end of the airlines.
Yeah, no doubt about it. All right, let's get back to world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. German Chancellor Olaf Scholz is in Washington meeting with President Biden to discuss the ongoing situation along Ukraine's border. An estimated 100,000 Russian troops have moved into place along that border. The leaders are expected to discuss the Russian Nord Stream 2 pipeline into Germany. Yesterday, National Security Advisor Jake Sullivan warned that if Russia does attack Ukraine, that pipeline will not move forward. 2 years of free community college is out of the Biden administration's Build Back Better plan that Democrats are trying to salvage. First Lady Dr. Jill Biden confirmed that today when she addressed a summit of community college leaders.
We knew that this wasn't going to be easy. Joe always said that. Still, like you, I was disappointed.
Jill Biden herself is a longtime community college professor. She says while 2 years of free community college is out of the proposal, some other assistance may be on the way, like more Pell Grants. There's never been a worse time to buy a home. That's how you could read the latest monthly survey from Fannie Mae.
Only 25% of Americans tell the mortgage provider this is a good time to buy. That's the lowest since Fannie Mae started asking in 2010. 69% of respondents say this is a good time to sell. That is an all-time high. Fannie's chief economist says young people, more than anyone else, think home prices have even further to rise. A separate analysis from Zillow finds prices rising fastest in family-friendly suburbs. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much, Nancy Lyons in our DC newsroom. So, real estate. Natalie Wong, Joe Constance, putting this story out on Bloomberg. The fortunes of Manhattan's office market are coming down to
the new versus the old.
Yeah, this happens. Glassy skyscrapers that have popped up in recent years, luring companies seeking new space and preparing for the hybrid work era, a sign of New York's revival from the depths of the pandemic. Left behind, though, are countless older buildings that have not been modernized in the past decade, presenting a costly problem for landlords. We talked about this. We've seen this Midtown office space, right? Like, yeah. Everybody wants kind of the office space like we have, right? It's open, it's airy, there's light. It's nice.
Okay, but this is a conundrum
gorgeous,
for the buildings, the owners of the buildings that haven't been updated. Are they going to pour hundreds of millions of dollars and do this like full gut renovation? This is certainly a gamble right now when office use is down in general. Available space piling up at a record rate. High-profile companies such as Deutsche Bank, HSBC are actually shrinking their global footprints.
Yeah, this is going to be, maybe this is, ultimately the fallout post-pandemic. The office vacancy rate in Manhattan is 12.3%, up from 7.8% 2 years ago. This is from CoStar Group. At 15% of existing buildings, at least a fifth of the space is available.
It's massive. Yeah, I mean, look, I talked to some friends, ran into them in our neighborhood yesterday. We live in this residential part of Brooklyn. Oh, you're funny.
Sorry.
You're on. Carol's on.
2 hours of sleep, and that's the joke you get.
And, he told us he was moving to the suburbs with their young kid, and I asked what he and his wife were going to do for work, and he was like, look, we're working remotely right now, so we don't need to be in Brooklyn.
It's a lot of that. I mean, I know I'm hearing from people where their employers are like, yep, just stay home, go where, live wherever you want to. So in a city where roughly 90% of the office stock is more than 20 years old, the disparities are stark. You've got new skyscrapers, including those at the Hudson Yards, mega development, and other places around the city. And that is in contrast. And you got to think about it. A lot of people are going to want to move into the new space.
Yeah.
Right? All right, you're listening to Bloomberg Radio. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just about the best level of the day right now for the Dow Jones Industrial Average, up 173 points, up by about 0.5%. The S&P is up 14. That is a gain of 0.3%. NASDAQ up 43, a gain there also of 0.3%. 10-year yield now 1.90%. We do have spot gold pushing higher by 0.8%, 18.23 the ounce. At a retreat for West Texas Intermediate crude oil, down 1.1%. 91.33 a barrel. Stocks are edging higher. Choppy trading. Investors are assessing the outlook for monetary policy ahead of key inflation data later on this week. S&P, as I mentioned, modest gains, advances in energy and semiconductor shares, offsetting losses in big tech names. Again, recapping, S&P up 14, up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. And in the new issue of Bloomberg Business Week, which will be out later this week, a timely column considering all the M&A activity that we're seeing this week. It's like wild, right?
Yeah, well, my question is how Joel does it. He's not with us right now to like weigh in.
I want his crystal ball.
Yeah, because I'm
going to buy lottery numbers based on his crystal ball.
Yeah, he knows. He knows what's going to happen.
All right, so let's get to it. Let's talk about it. Brooke Sutherland is with us, Deals and Industrials columnist at Bloomberg Opinion. She's here in our Interactive Brokers studio. So, and also with us, Joel Weber, editor of Bloomberg Business Week, also in studio with us. And we're talking about, first of all, let's just talk a little bit about Frontier Spirit, because that's some of the M&A activity that we're seeing.
Sure.
What are your thoughts on it?
I mean, I think it's the immediate thought that I had when I saw this deal was that this is going to be one that antitrust regulators are going to want to take a close look at. They're clearly at pains to pitch this as consumer friendly. They talk about $1 billion in annual savings for consumers. I'm a little that math is a little squishier than what you usually see in terms of cost savings at the corporate level, and so that does raise some eyebrows. But they are clearly trying to pitch this as consumer friendly. I don't know if antitrust regulators are going to see it that way. They tend to be very sensitive when there are deals involving consumer-facing companies. Remember, this is also an industry that got tens of billions of dollars of pandemic aid, and if it was important enough to backstop the industry during the pandemic, it is certainly an important enough industry to take a very harsh look at from an antitrust perspective.
And a part of the industry, too, that doesn't necessarily get rave reviews from customers, right? We're talking low-cost airlines, no frills, and people sometimes say they get what they pay for.
Exactly. And I mean, there is a market for that. There is a traveler who says, you know what, I want to pay a very low price and I don't need the peanuts and the drinks and check bag or whatever it is. And there is a market for that. But I do think there's a broader question of how airlines treat passengers and the U.S. taxpayer, who at the end of the day is the one that funded this bill for all the pandemic aid. And so there's been a lot of questions about, how do you improve the passenger experience? We've seen other airlines get rid of change fees, some questions about, do we start to rethink some of those baggage fee policies, better internet service, whatever that might be. And so I think the U.S. government is clearly going to be sensitive to
Just throw me a pillow and a bag of peanuts. So let's bring in Joel Weber, because, Joel, we were marveling at your crystal ball, because here you are. This is going to be in the new issue of the magazine, and here we have all these deals happening, and this comes after a record M&A year. Last year,
I knew nothing. I knew nothing.
Can you just pick some lottery
Joel
tickets,
Weber's being
some lottery numbers for me?
Give me some money. We can go down to the street later.
Exactly.
So Brooke, like the thing that I was thinking about this morning when this hit was not only do we have this back page that was like largely adjacent to this that you had written, but also just Lena Khan, right? And here's a person who's like looking to make her mark. Airline industry seems like a punching bag for her, right? So what do we know about her and specifically the airline industry?
I think, she's been very clear that she does not think antitrust enforcement over the past couple of years has been as tough as it should be. And we should also say, the DOJ has also been vocal about wanting to step up its scrutiny of deal making. This is a numbers game to some degree. We've seen so many deals that the FTC and DOJ just cannot possibly intervene in every instance where they maybe would like to, and they don't have the staff or the budget that maybe they would like to have as well to go after some of these deals. And so, I think by necessity, that's going to mean that they focus on the higher profile deals where it's, an already consolidated industry, where you're talking about, issues of national security or strategic economic importance. And for me, the airline industry checks all of those boxes. And we've already seen the DOJ intervene. You had a not even a deal, but a marketing alliance between JetBlue and American Airlines. And the DOJ sued to block that in September and said they thought that was problematic for antitrust reasons, and sort of was a de facto merger where you get the benefits without trying to run it through all of the hoops you normally would.
This is like putting it all on like a T for Lena Khan. So let's talk more about what you wrote about in the magazine, which was the Lockheed Martin Aerojet deal. So what does Lena see there?
So first of all, we should specify that no matter who is in charge, defense deals always tend to be tricky for obvious reasons. The U.S. cares a lot about its defense budget and being very competitive with defense. And so these always tend to be tricky deals. And we've seen a ton of consolidation, though, over the past couple of years, because there was a concern of, are these companies as efficient and as effective as they should be? Are they as competitive as we want them to be? Or should we have more consolidation, and that will help with that? But you saw a deal with Northrop Grumman buying Orbital ATK, which is also a rocket booster maker. That makes Aerojet Rocketdyne the only remaining independent company. And so the concern of the FTC is, okay, if we allow a big defense contractor like Lockheed to buy Aerojet, then does that leave all of the other defense contractors at a disadvantage? Can they get all the parts that they need? Can they compete as effectively? And does the U.S. government then end up paying a bigger bill? That's their concern.
And you think about like what we've seen with Apple, like being able to deal with its supply chain and for the most part do much better than a lot of smaller players. So it's a legitimate concern.
It is. And, it's good to be a big company these days. I think that's a really good point. And we talk so much about big tech and how all the concerns there. And it's just been fascinating to me that you haven't necessarily seen the same level of scrutiny in some of these other industries. And so it's healthy in a way that we're seeing some pushback on defense mergers. But, the aerospace sector, you have two essentially big aircraft lessors, two big aircraft manufacturers, two engine manufacturers. You've seen a lot of consolidation in other, parts of aerospace manufacturing, and I'm surprised we haven't seen more scrutiny, which is why I think when you throw this airline deal into the mix, I think that's just going to raise a lot of questions among regulators.
Wow, it'll be a fun year. Think we'll be talking about this one again?
Yeah, I think so too.
Yeah.
Yeah, definitely. And potentially be talking more about Spirit and Frontier as well.
Oh,
what if there's another airline merger, and then, we're going to have to reevaluate all over again.
There should be like a betting app for this, right? We might have more of that this week. Yeah.
But do they have enough people on staff? Like, I just think about the record year we're just coming off of an M&A, and it looks like we keep talking about the deep pockets that everybody has. Money's been cheap, and everybody's built up their balance sheets.
Investment bankers love it.
I know,
it's
right?
Great.
Bonus galore.
But I think that is a really big concern. And, I think that's why you keep seeing so many deals announced, is that is part of the calculus on the part of these bankers and the CEOs who say, look, the FTC, DOJ are only going to challenge so many deals. Like, we're going to bet ours is the one that gets through.
A big thank you to Brooke Sutherland, Deals and Industrials columnist for Bloomberg Opinion. And check out her story. It'll be featured in the upcoming issue of Bloomberg Businessweek magazine. You can read it now on the Bloomberg and at Bloomberg.com/Businessweek. Also, her new column for Bloomberg Opinion. Also joining us, Joel Weber, editor at Bloomberg Businessweek, both with us in the Bloomberg Interactive Brokers studio.
February is Black History Month. Every day this month, we're celebrating significant moments in U.S. Black history. Now, with your installment for February 7th, here's Bloomberg's Renita Young.
On this day in Black history in 1926, Negro History Week was observed for the first time. It was the brainchild of noted historian Carter G. Woodson and other prominent African Americans. And over the next few decades, mayors of cities across the United States began issuing yearly proclamations recognizing the week. So by the time the late 1960s rolled in, along with the civil rights movement and a growing awareness of Black identity, Negro History Week had evolved into Black History Month on many college campuses. So President Gerald Ford officially recognized Black History Month in 1976. And since then, every U.S. president has officially designated February as Black History Month. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for that. This is Bloomberg Radio.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We have but 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic, as we bring together TV, radio, YouTube to see actually a little bit of buying going on, up about 0.25%, but it ain't much and volumes are thin.
Yeah, they are, but they're not necessarily if you're a cruise line, because they are getting a big bounce back. I've been watching that sector. Norwegian, Royal Caribbean.
Thinking holidays? Thinking like
Yeah, what are you thinking about, Carol?
Put me on a cruise ship. But there's an analyst over at Stifel who thought the sell-off last week following Royal Carib's earnings was overdone. He thinks they're setting up for a better time this year. So anyway, you're seeing investors come into that space. They are among your top in the S&P 500.
Well, interesting to finally see some direction in the S&P 500 because it has been bouncing between gains and losses throughout the day today, at least 10 times between gains and losses by my count.
Well, direction is but 9 points higher on the S&P 500, so we'll see if it holds into the last hour of trading. But we are up at about 0.2%. 45.08 is where we trade on the S&P. We're up 163 points on the Dow. And in fact, the Dow and the Russell 2000 have stayed in the green much more for the day. It has been more of a small cap cyclical play on the day. The Russell 2000 up more than a percentage point, up 20 points. The Dow up 162 points, as I say, that's almost 0.5%. And the NASDAQ has been laggard. Big tech not feeling much love today. We're up less than 0.1%.
You see that on the sector level as well. There's one sector in the S&P that's in the red, and it's the communication services companies. It's off about 1.6%. Everything else, though, remained pretty much in the green, and the theme remains the same. I feel like a broken record. It's energy, industrials, and financials that are leading the day. Those are also energy and financials, the two sectors that are still in positive territory for the year. It is that global sort of reflationary trade that continues to be the theme du jour.
Yeah, and you got something like 350 of the S&P stocks higher. Unfortunately, a lot of the more heavy cap weighted names aren't necessarily participating. The biggest percentage change right now in the S&P 500, at least to the upside, that belongs to Tyson Foods, which came out with earnings. It talked a lot about, of course, supply chain issues and higher input costs, but it also talked about, well, being able to pass those costs on to other folks here, and that's why you're seeing the shares higher on this day by about 12%. Spirit Airlines higher by about 18%. Frontier Airlines making a bid for that company, a 19% premium over where the shares close on Friday, even with the combination of these two companies, going to be relatively small. Again, these are discount carriers. I think their combined revenue is still going to be less than $6 billion, which puts it below JetBlue and Alaska Airs, but again, kind of beefing up maybe their presence should this deal pull off. I think this is an interesting story, Carol and Tim. Caroline and Taylor and I were talking about this a little bit earlier with Meta Platforms. The share's down 4% here right now, and there was a lot of talk that with that big drop we saw last week, that would be the dip buying opportunity. If you really believe in Meta Platforms and the longer term outlook, not just for the metaverse, but even just for their ad business, why wouldn't you buy in at these levels at 227? But you're just not seeing that right now.
Yeah, it's kind of surprising. I don't know. I mean, shares are down 30% in 3 days. So if dip buyers were to come in, you'd think now would be an opportunity?
Yeah, I mean, you know, I mean, who knows what the level is, but I guess the question is, we've seen these types of drawdowns on Facebook before, given their cash load, given their clout, and really just given their presence. Is anybody really counting this company out? I mean,
but never a drawdown like this.
Facebook's not going away tomorrow.
I wouldn't count them out. I mean, you just think about how huge their platform is and their reach. Who's really going to come up against them at this point? And they offer so much, right? It's not just one service. It's a lot of different services.
And I mean, Facebook's still viable, right? I mean, there are still a lot of old people and conspiracy theorists and other people.
Are we, hold on a second. Are we forgetting that Facebook owns Instagram, owns WhatsApp? It's so much bigger than Facebook's core product. So I've seen a lot of chatter in the last week of people saying, I haven't logged into Facebook for years, but meanwhile they're posting stuff on Instagram.
And that's where you're seeing growth.
Yeah.
And you could argue, just to step in quickly, Caroline, before you come in, that it's maybe not a bet on if the company is around or not. It's just a re-rating of the stock, given some of the commentary that we heard. And the commentary after the earnings, none of that has changed. So a lot of analysts were re-rating how they were going to value the stock.
I just sort of feel like this has kind of the same churn that we saw after the Cambridge Analytica scandal, where kind of people kind of shunned it.
But that never affected the share price.
To a certain extent. And then, of course, when you got that next earnings report and everyone was like, oh, okay, they're still like a cash juggernaut. And everyone jumped back into the pool.
And they're more of a focus on small businesses, aren't they? And how much are they really looking and got the ability to pass on and invest and advertise right now? Now, one of the kind of failings of late of Meta has been, of course, their cryptocurrency area, the fact that they got out of DM. And I'm going to pivot here because, well, maybe they shouldn't have done, because I tell you what suddenly has decided not to move in tandem with big tech is Bitcoin. We're actually up for 5 straight days. We're up 15% over the course of those 5 straight days, and that's the longest winning streak we've seen since September 2021. It doesn't seem to matter just for these few days as to whether big tech is under pressure. Bitcoin moving on its own, it would seem.
Yeah, inflationary move perhaps in Bitcoin. I mean, we're going to be talking about inflation a lot. My segue was not as good as yours was, Caroline. I'm just going to put it out there. It's a big week for inflation. We're going to get the CPI print on Thursday, an eye-popping number. I think we're looking at, 7.3% year over year for the month of January. Meantime, earlier, we did hear from ECB President Christine Lagarde. She weighed in on what she's seeing in terms of inflation in the euro area. Check it out.
Inflation has risen sharply in recent months, and it further surprised on the upside in January, with the rate increasing to 5.1% from 5% in December. Inflation is likely to remain high in the near term.
All right, so Christine Lagarde of the ECB expecting inflation to remain high. She did, however, say that any kind of adjustment to monetary policy will be gradual. She talked about flexibility, optionality. It was like kind of hearing from the FOMC all over again, Tim.
Look, a good reminder for the week when we're going to hear from a lot of politicians trying to play the blame game when it comes to inflation, that this is a global problem. This is a problem around the world.
Yeah.
And it's, yes, a huge issue in the United States, but a huge issue in many other countries as well.
Yeah, and I mean, of course, our comments come on the backdrop, of course, the scene that surge that we saw in Italian yields, as well as in Greek yields as well. And I am curious, I mean, she talked about the idea of being gradual here, but this also brings us back to this whole debate as to whether these central banks have the luxury of being gradual. And I think that's what's been priced in. The idea that people aren't buying into the idea that Lagarde and Powell and Bailey and all these other folks can sort of take their time.
And the market, sorry, Caroline, sort of trying to force their hand. The way we had with the 2 and the 10-year here in the U.S. before we got a pivot from Powell, I was reading commentary this morning saying that the markets were sort of forcing the ECB to be less dovish. I know that doesn't mean hawkish than they had been before.
Yeah, I like that turn of phrase, less dovish. But I mean, particularly when you're focusing on the commodities call, the fact that you get someone like, of course, a Jeff Curry has been on commodities for years, 3 decades over Goldman Sachs, saying he's never seen anything like this. Of course, it's a supply side issue, but it's an inflation issue.
Well, and that's what I wonder too, because I mean, typically when we've seen these big moves where inflation was being driven by commodities, there was a certain economic growth component that came along with that. And there seems to be a disparity between the level of increases that we're getting in the commodity space, particularly with metals, and the economic growth that's attached to that. And I think that has to be concerning.
All right, we're going to continue this conversation. Join us in less than an hour's time. We'll go for our cross-platform coverage Beyond the Bell on TV, radio, and YouTube. We're going to count you down to the close on this Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
WB function on the Bloomberg, looking at the 10-year world bonds. And, you know, we went from seeing a lot of negative rates, and we've definitely seen a move up in many different countries. So it's a very different picture than where we were certainly a year ago and certainly even a few months ago.
So what does the print mean on Thursday for Jay Powell, for the Fed, and for the pace of rate hikes?
Yeah, it is, I think, the last inflation or big inflation print that we'll get before the next FOMC meeting. I don't know. You know, what we have heard is that the expectation that this is lasting a lot longer than everybody thought, but that it's not going to stay around forever. That as those supply chains right themselves, that you will see supply demand come into a more balanced level, and that should bring prices down.
Hey, also, what's priced into the equities market when it comes to rate hikes? We talk a lot about what we learned from the bond market when it comes to rate hikes, but I'm interested to see the way equities respond when we do finally get rate hike news.
Well, the thing is, what we often see early on in a rate hiking cycle by the U.S. Central Bank is that you tend to see equities go higher. We've, looked at this historically, especially in, early on in the cycle, because it's a sign that the Fed doesn't need to do all these unprecedented measures to support the economy and prop everything up.
Well, check out the story on the Bloomberg. JP Morgan strategists say buy stocks as rate hikes are now priced in.
Wait, a bank saying buy stocks?
They're doing it. They're saying it. Bank of America is saying that it could end poorly, though. So another bank saying not so fast.
There's a lot of people and a wide variety of views. We'll see. Time will tell on this one. All right, let's get back to world and national news. Nancy Lyons, what do you got for us?
Thanks, Carol. President Biden is holding a meeting with German Chancellor Olaf Scholz at the White House this afternoon as the standoff with Russia continues over Ukraine. This weekend, U.S. National Security Advisor Jake Sullivan said if Russia does invade, the Nord Stream 2 pipeline between Russia and Germany will be abandoned. So former U.S. Ambassador to Germany Bob Kimmett tells Bloomberg energy is certainly part of today's discussion.
The president and others have been talking to countries as far afield as Qatar about ways to bring natural gas to Europe. And I think that if President Putin sees that he doesn't have a lock or stranglehold, whether it be on Germany or others, with natural gas in the cold winter months, that would be something that he would have to figure into his decisional calculus.
Former U.S. Ambassador to Germany Bob Kimmett. The president and the chancellor will be holding a joint news conference in just a few minutes, and we will carry it live here on Bloomberg Radio. We now know that one line item is out of the Build Back Better plan, and it's free community college. First Lady Jill Biden made that announcement before community college leaders today.
Congress hasn't passed the Build Back Better legislation yet. And free community college is no longer part of that package.
Jill Biden, who is a community college professor herself, admits she's really disappointed, but she says she and President Biden have not given up on the needs of students. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Well, it all started late Friday. I was still at the office. A story crossed the Bloomberg about Peloton maybe being in play. Well, the stock is definitely reacting today.
Yeah, Peloton shares up more than 23% as we speak. They were up as much as 31% earlier in the day. Amin Bensaid, technology and media analyst for Bloomberg Intelligence, has been watching this closely. Amin joins us on the phone from New York City. Okay, Amin, Peloton has just gotten beat up over the last year. I mean, shares down more than 80%. I'm wondering, who is the likely suitor, if there is one at all?
That's a very good question. Thanks for having me on. So I think, Peloton is Peloton's best suitor. And but what I mean here by that is they are, if they fix the issues that they have been having in the last, in the last few quarters, even in the last year, there is no company that does exactly what they do at the scale they do. They're still a leader in the market. But looking at the rumors and the news that we've seen, any tech company that wants to grow their fitness vertical significantly could be a better suitor. Or, as we discussed earlier, apparel companies like Nike, also could be a good fit. So it really depends on those companies and their strategic goals.
Well, I mean, Lululemon already has the Mirror. Would they possibly do another add-on so that it kind of improves the variety of offerings that they've got?
It is possible. It will make a good fit if both, like Peloton and Mirror are combined. And that's why what we wrote in the past is Peloton's growth expectations could improve if they are the ones acquiring, for instance, a company like Tone or Tempo. And those are the questions that we talk about most with investors. But to your point, yes, an apparel company could have significant synergies with Peloton.
What about a potential, John Foley, the founder and CEO of Peloton, someone we've spoken to several times over the last few years, he owns 85% of controlling shares, something like that, with Peloton. It is. He maintains control of the company. Do they have to get him on board? How much of an impediment would he be if a suitor were to come in and say, I want to buy Peloton? Take us into that.
Yeah, 100%. I think that's the main question that investors are asking us when we're talking about this deal is if Peloton doesn't want to be sold, it's not going to be sold. Insiders have majority ownership of, as you mentioned, voting rights for the company. So it will have, not only have to get the CEO on board, but also other insiders. But yes, if they don't want to be sold, it's not going to happen.
Yeah, and I just want to clarify one thing. He's got 21% of the outstanding shares of the non-traded B-class shares.
Okay, but it's enough that they've got to get his signing off on it. Does, in your view, does Peloton have to do something, some kind of liquidity event here?
Just lastly, quickly to the point, B shares are typically 20 votes to one Class A share. So that's why if you have the majority, even if a minority of them, you can have high ownership of the company. But to your point, yes, liquidity last year they raised $1 billion with some share issuance. And our view there is that possibly they're preparing for M&A. But in the near term, do they need more liquidity to fix some of the challenges that they have? The balance sheet, in the balance sheet, the answer is no.
Okay.
But who knows if the demand keeps weakening, what can happen next year?
I mean, what's wrong? Is it just like, if we take out the pandemic, I mean, what would be the Peloton company today? I mean, like, what's the normal expectation for a company like this sans a pandemic, where people were obsessed with it because they couldn't they couldn't work out elsewhere? Not everybody, because it's an expensive, pieces of equipment.
It's a very good question. And what's wrong there is, if we can say it wrong as a term there, is when you look at Peloton for the fitness vertical that they have, or fitness, platforms, cardio, they are doing really well, and there being a significant pull forward to them during the pandemic. But to grow further than that, you need more than just cardio. You need strength, meditation, and things of that sort. Now, they do have classes for that, but they don't have a hardware focused on that. So that's why you see the demand has been weakening on the cardio. They don't have a good answer or a good alternative to bring those members back.
Okay, Apple. There's a lot of controversy around this. I don't know if I totally see it, but came on Bloomberg Quick Take earlier today and gave a pretty convincing argument about why this actually would be a good fit for Apple. I mean, what do you make of Apple potentially buying up the company? They've got the cash to do it, and we know they want to go more into fitness.
It really just depends on Apple's strategy. Because, yes, Apple and Amazon both have plenty of resources to get Peloton without any issues. But it really depends if the strategy is to grow their fitness ecosystem outside of the apps that they both have, including now the hardware, which is a major selling point for a lot of those customers. Then yes, it's possible, but I'm not sure if Apple wants to take into the hardware part of the fitness ecosystem just yet.
I agree with that. I agree with that assessment, because you're not, if you think back to the Beats acquisition, I think it was 2014, about $3 billion. It was a pretty big acquisition at the time for Apple. They were buying a headphone company, but they were really buying that underlying technology that was to build the music streaming service that turned into the Apple Music streaming platform. If you buy Peloton and you're Apple, you're getting the manufacturing and production of bicycles,
right,
and treadmills.
Feels kind of weird.
That doesn't feel very Apple-like.
Exactly. I mean, Apple are, they're known best for making their own products. And even though when they made some acquisition, they were like, adjacent products to their main product. But yes, a bike or a treadmill is a little bit, let's just say it, a little bit far-fetched. But, everything is possible. They have the resources. It really depends if they want to focus on fitness or not. Peloton, of course, is a leader on what they do for the fitness, for at-home fitness. So we will see if they decide to take the push or not.
Hey, I mean, how much of the stock run-up today is just a lot of short covering? Because right now, about 12% of the float is shorted. So how much of what we're seeing right now is maybe not necessarily enthusiasm over a deal, but just the shorts running crazy?
No, it's a very good question. I think it's a combination of both. And of course, as you mentioned earlier, Peloton shares have been down 80% from their peak. So it's a combination of both, some short covering, some expectations about possible M&A. We will see. For us, the way we see it and when we talk to investors is just organic growth and how the company growth expectations are for the next few years. Could they achieve that organically, or do they need to acquire other companies? But if they get acquired, that changes completely the narrative.
Hey, I mean, kind of, something that I've been thinking about a little bit with Peloton. I talked to somebody, a little over a year ago at the height of the pandemic. She was looking for a new job. She saw a position opening at Peloton. I said, this would be a great fit for you. She's like, it is so hard to get a job there. Everybody wants to work there. And I'm wondering how much more difficult that has gotten for talent retention at Peloton as the stock price has gone down, as we know morale from reporting has shown at the company is low. I think of stories like today from Spencer Soper, where Amazon is increasing its base salary to over $300,000 a year, for example. How difficult does it get for a company to attract and retain talent when you see a share price down somewhat 80-some% in the last year?
Yeah, I mean, to your point, morale hasn't been good, not only because of the share price, but also of the bad press that they had with, some of the characters being in some TV shows being killed off on a Peloton bike and some PR mismanagement that happened. Let's say it like that. But yeah, I mean, morale is not great to speak. The company had a very, very good run during the pandemic, and it's still. I mean, to be fair, there's still a leader to what they do. We don't have exact numbers to see how much of that impacted the brain drain in the company, but I wouldn't be surprised to see, some of their, maybe some of the top performers would have gone to, competitors like, Equinox Cycle or Nordic Crash and others. So it is a part of that.
All right, I mean, don't think really quickly. 5 seconds. Who's the best fit with Peloton? Don't think. Just go.
Peloton.
Peloton is a solo company.
Oh, well done.
I like it.
Well done. Amin Ben Said. He's tech and media analyst here at Bloomberg Intelligence on the phone in New York City.
Good stuff. Hey, let's get an update on the trading day. Joining us now is Charlie Bell.
Hi, thank you very much. Peloton, that stock up now by 23.7%. We are awaiting remarks from President Biden. We'll take you to the White House live once he begins speaking. The Dow, the S&P, NASDAQ, very close to session highs right now. 40 minutes to go until that closing bell clangs on Wall Street. Stocks higher, choppy trading. Investors assessing the outlook for monetary policy ahead of key inflation data later on this week. S&P up for a second day, up now by 15 points, up 0.3%. The Dow up 201, up 0.6. NASDAQ up 47, a gain there of 0.3%. 10-years down 2/30 seconds. 10-year yield 1.91%. Spot gold up 0.7, up $12 the ounce right now to $18.21. West Texas Intermediate crude down 1%, 91.37 a barrel. Natural gas tumbling 7.1%, $4.24 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I thought that was so interesting. Thank you so much, Charlie. Peloton staying alone. I would assume it's trickier, I think, for a brand like Peloton potentially to get, to be part of another company. I think it has a very clear identity. Having talked to John Foley and a lot of them and seeing how they continue to grow out the platform, I get what Amin says about that. What makes sense is them kind of staying alone, but maybe they just need to regroup and really figure out what is this company in a normal environment, not a pandemic.
Well, I also think that the price maybe has gotten beat down so much that John Foley wouldn't let go of the company at these valuations. I mean, coming from a place where the stock was trading at $147 a share. Now it's at $30. Yeah, $30 a share.
We're talking about a company with, expected to have about $4 billion in revenue this year. We're looking at about 5% year-over-year growth. I mean, it's got a 9.8, almost $9.9 billion market cap. I mean, the valuations have certainly look a lot more reasonable. And I guess we shall see, where it makes sense or whether they can ultimately in this environment figure out their way forward. As he said, they don't need a liquidity event. They don't necessarily need to raise more cash.
Right. I wonder about product development, though, and the way that the company grows from here, because you do have those folks who are the diehard Peloton users who are going to stick with Peloton even if the gyms open back up, even when gyms open back up.
Right.
But you also have a group of people, and look, anecdotally speaking, who haven't stuck with it, right? Who have, my colleague Will, who is here at QuickTake, who was super into Peloton in the pandemic, but now comes with a gym bag every day and goes to the gym instead of riding that Peloton.
Right. And as Amin said, they're really good in cardiac. They do that really well, but everybody wants strength training. They want meditation. They want so many different services. But
the app has that.
I know. But you think about, do you want something that kind of provides some equipment or a space? Like you think about the mirror, right?
Yeah.
You can do so many different things. I don't have a mirror, full disclosure, but I mean.
Or a tonal. Have you seen the tonal?
I've seen that also. Is that LeBron?
I think so.
Yeah.
Yeah. As far as a spokesperson, right?
Yeah. I'm not sure if he's invested in it as well and stuff. But there's a lot happening in this space, right, where you can actually have it in your home. I don't know what the answer is.
I've definitely, I don't necessarily see the Apple one happening just because of the big hardware element that's non-Apple made hardware. The only corollary there is Beats, but again, they weren't. So I don't know.
But do they Appleize it? Like, do they then come in and kind of do their own thing?
I don't know if you can do that, like put an iPad on one of these, because at its core, this is an exercise bike, and the technology there has been around for, decades?
But you do think about the watch health, like
Yeah,
They are
and that's
building
why
that out, right?
from a platform, from just the platform, just the app, it makes total sense if it didn't have this hardware element.
What's fascinating, I keep thinking about Mike Regan's story and the CFO put, and companies have a lot of money on their balance sheet. Even Peloton, that's been beaten up, as we said, we just heard that they've been able to, tap markets, so they've got money to do things also. There's the ability in these stocks that have come down so much in valuation that there's an ability for people to maybe look at a Peloton or another company and continue to do some kind of, buying. And that's why that M&A space is pretty active.
It remains to be seen. The book has not yet been written.
Stay tuned. Is that what you're saying?
Yeah, stay tuned.
All right, let's get to Kriti Gupta, her chart of the day. She's Bloomberg Markets correspondent. Kriti, what do you got for us today?
Yeah, well, I decided to take a trip across the Atlantic because I think one of the biggest stories of last week was what came out of the BOE, the Bank of England, and the European Central Bank. The idea that even the European Central Bank, which is kind of seen as this super dovish entity around the world, even Christine Lagarde is saying, well, you know what, I think it's time to really put the transitory word into retirement, start thinking about hiking rates in the face of surging inflation, of course, surging gas prices in particular for that region. So my chart of the day kind of compares the two banks through the FX market. It compares the euro against the pound sterling and really says, well, if you're expecting a hawkish Bank of England, which, by the way, they actually are saying a 50 basis point hike in their next meeting is possible. They had 4 members actually vote on that. Well, if you see that kind of level of hawkishness, well, it should mean that the pound would rally, right, would strengthen because of those rates. And instead, the opposite is happening. The pound is actually weakening against the euro and bouncing off of a Brexit level that was kind of significant back in 2016 when they were dealing with Brexit. So some technical levels coming into play. The big takeaway here, and I think my colleague, who's an FX strategist over in Europe, actually summed it up perfectly. He said, the bigger the crisis, the bigger the silver lining for the euro, because it means that if there's a geopolitical situation with Russia and Ukraine, if there's crazy energy prices for Europe, well, that's all just means that the ECB is going to tighten, it's going to be more hawkish, and that's all going to play well for the euro.
So what does this mean potentially if we take it from the euro and from the UK to the United States with inflation this week, potentially X number of rate hikes priced in from the Fed this year? Help us apply it to the data that we'll learn this week.
Yeah, well, the inflation piece is a really big part of the equation. And when we look here in the United States at what the strength of the dollar is, right, whether it's the Bloomberg Dollar Index or the ICE Dollar Index, whatever you really like to use to measure how strong the greenback is, the two main currencies that you kind of compare them to across the Atlantic are going to be the pound and the euro. So it's not just about kind of what's happening in Europe. It's that if you start to see more inflation kind of built into those currencies, does that mean a weaker dollar for the United States? And what does that mean in the face of the inflation that we have here? And that's really where you start to see way more questions, way more complicated questions about who has inflation the worst, who's targeting it the best, and which issues, a hawkish Fed, a tighter Fed, or simply energy prices, whether it's natural gas in Europe or simply oil prices here in the States, which one kind of drives the currency? So you're going to start to see all three, I don't want to say compete with each other, but kind of start to have a little bit of a tug of war when they start to kind of digest these issues.
All right, we just want to remind everybody we're monitoring the White House. President Biden expected to catch up with Chairman Chancellor Olaf Scholz. They are holding a joint press conference after earlier meetings. So as soon as the president begins speaking, we will take you there to the East Room of the White House. In the meantime, Kriti, one story that Tim and I are obsessing, it is the most read story on the Bloomberg as we speak. Amazon raising its base salary cap to $350 from $160.
350,000, Carol.
Oh, sorry, 350,000.
Gotta
Here,
remember
you'll get $350. 350,000. Forgive me. So doubling that base salary cap.
Yeah, I mean, it's what's fascinating to me, and we were talking about this at the top of your show this time around, was that we're starting to see commercials, not just for advertising products, but advertising hiring, which really tells you a lot about the labor market that we're in, right? The idea that labor is scarce at the moment and higher wages are a really big part of that equation. And you've seen that play not just in Wall Street, not even just on kind of the folks who make wages on an hourly basis. You're seeing that in Amazon as well, in big tech, in Silicon Valley, where you do have kind of the heart of innovation happen a lot. So to see Amazon not only increase their salaries, but to double it to $350,000, which even for Wall Street standards is quite a bit of money, quite a chunk of change, if you will. I think that's pretty significant, and it's also not quite the end of it, right? This isn't peak high wages. It means that we could see even more, and one of the big concerns is, does this mean we get into kind of a wage price spiral, or perhaps are we already in one? And those are questions that, of course, the Fed is going to answer as well.
Well, I think what's particularly notable about this is when it comes to Amazon, you're seeing wage pressure on both sides, right? You see it at the fulfillment center workers around the country who have a minimum wage of $15 an hour. So in September, though, the company did say it had raised the average wage for these employees to $18 an hour. But a big part of this, Creedy, is that Amazon stock hasn't really done much since the summer. And the last couple of years have not been great, or the last 18 months, I should say, have not been great. 12 months have not been great for the company, and that makes it tough to attract and retain talent.
Yeah,
on
and
the
I think
in the executive level, at the ones who are working in the offices.
Right, and I think one of the big kind of things that Amazon has going for it right now, and I think this is what actually helps it qualify as a big tech company a little bit, is that it has these massive cash reserves, right? So for a lot of these big tech companies that are dealing with the same issues the rest of the country is and the rest of corporate America is, well, they have a little bit more cash to kind of lay back on. And also remember, to your point, Amazon doesn't just ship items. It doesn't just serve as a big tech company, have this huge stock. It also is a shipping company as well, which is where you start to see the fulfillment numbers come in and the wages on hourly basis kind of rise as well, because a lot of their business depends on simply logistics as opposed to simply providing materials, if that makes sense, or sourcing products, I guess is what I'm looking for. I think what was interesting about the wage story, though, and you mentioned the $15 an hour for Amazon, potentially $18, is that even on the folks who are earning on an hourly basis, they're also making healthcare benefits. And that's going to be a big part of the equation as well. It's not just about higher wages, it's about vacation time, childcare, healthcare benefits. And those aren't things you get traditionally when you're working on an hourly basis.
All right, we got to run. Hey, listen, Kriti, thank you so much. Have a good afternoon. Kriti Gupta, markets correspondent at Bloomberg News, with her chart of the day and also what's catching her attention. In the meantime, we are awaiting President Biden. He is expected to hold a joint press conference with German Chancellor Olaf Scholz in the East Room of the White House. The German Chancellor, who met with the president earlier today under increasing pressure to take a stand on Russia over its military buildup near Ukraine. French President Macron just has met with the Russian President Vladimir Putin to talk about that buildup of Russian troops on the Ukrainian border. So there is a lot going on here, and certainly the world watching increasingly this development.
Also a lot going on when it comes to the markets, because we are less than a half hour away from the close of trading today. Charlie Pellet is here with an update.
Hey, thank you very much, Tim. Been a choppy day, but right now stocks are moving higher. We did see a dip just briefly for the S&P. Right now the S&P up 6 higher by 0.1%, but on track for a second day of gains. NASDAQ, as I speak, just turning negative, down 2 points now, down less than 0.1%. The Dow up 131 off session highs, up now by just about 0.4%. 10-year yield 1.91%. Stocks higher in choppy trading. Investors are assessing the outlook for monetary policy ahead of key inflation data later on in the week. Gold up now by 0.7%, $18.20 the ounce. The 10-year again 1.91%, and we do have West Texas Intermediate crude down 1%, $91.39 a barrel. Gold again up 0.7, $18.20 the ounce. New Jersey Governor Phil Murphy lifting the state's controversial school mask mandate as the Omicron variant's surge abates. Australia will be allowing double vaccinated visa holders to enter the country from February 21st, ending about 2 years of strict international border controls. Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health. He told us this morning the easing does make sense.
I do think that the vast majority of people want to be cautious and do not want to go racing into, a huge cloud of COVID. And so while there are some people who are, quite upset and obviously they should be listened to, but, certain point, the society gets to decide how to protect itself.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks, Pfizer up 0.6%. Its German partner BioNTech, its ADRs down 1.5%. AstraZeneca's ADRs up 1.7%. Moderna lower by 0.5. Johnson & Johnson down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are, of course, awaiting a joint press conference with President Biden, German Chancellor Olaf Scholz. They'll be in the East Room of the White House. Obviously, front and center is Russia's move when it comes to the Ukrainian border. So we will take you there as soon as it begins.
In the meantime, we are continuing to watch the markets here. Carol Main was talking about and the idea of this company pivoting to, augmented reality, virtual reality, metaverse company, and how quickly what investors are saying about whether or not they believe that it's going to do that, but also the value of Facebook if it doesn't continue to grow, because that's the main concern, right? This was the first quarter that we didn't see growth.
There's a great story, and I know I put it out on Twitter, that really said, all right, the concerns over Meta are overdone, because basically what they said is, okay, maybe Facebook is not growing, but Instagram and its other platforms, WhatsApp, right, are seeing growth. And the other thing is, who else has the number of people on their platform versus others? Where else are you going to realistically go?
Yeah.
And it's not just about those platforms, but there's marketplaces, there's group conversations, there's like all these different things going on. I'm not on Facebook, you can tell, but there's just.
But you're not on Instagram either, right?
No.
You're like one of those. What about WhatsApp?
No.
You're like a unicorn. You're one of those rare people like Zuckerberg doesn't have his tentacles on.
I'm a unicorn.
You're a tweeter.
But it says I am. But the point is that it's got such an entrenched system where people go to, and it's not just to be on Facebook, it's to do so much more.
Well, I think a part of the conversation that we missed earlier because we ran out of time was the small business side of this and the way that small businesses rely on Facebook for targeted advertising, and the way that Apple, the changes that Apple has made with its most recent version of iOS, the privacy changes that don't allow for tracking across apps, the way that has made it more difficult for Facebook to tell its businesses and its advertisers that it can reach the people that they want to reach, the more expensive it's gotten. So if those small businesses are not finding effective advertising on Facebook or having to pay too much in order to do that, where do they go?
Right, exactly. And I know people talked about TikTok and
Well, that's a huge from the user's perspective.
Right, but exactly. But the point is, as someone in this article, and I'm going to find it again and maybe retweet it out, because I just thought it was really smart in terms of how it laid things out. I can't remember exactly whether it was Wired or whomever put it out. But this whole idea of where are you going to go? I mean, there's concerns about being on TikTok, that platform, right? Because we know of the concerns behind that. If it tries to branch out and do, offer up more services, there's concerns about privacy and, I'm just saying that it's where else do you go when you have this massive social universe,
so I think
whether it's small businesses or individuals?
You hit on something really important with the Meta story, which is for years the concern, from some shareholders has been, what are regulators going to do? What are regulators going to do? What are regulators going to do? And you saw scandals like Cambridge Analytica that took a little bit of caused Facebook stock to fall a little bit a few years ago, and some regulatory concerns. But it wasn't regulators that ultimately were the ones to cause the single biggest decline in stock price for the company and the single biggest daily destruction of wealth for a single company ever.
The company did itself.
Exactly.
Yeah. Well, but again, is this a company that's thinking about, okay, so where's my future growth? Where does it come from? And do I need to make some big investments? And is this the right play? I mean, our own BI folks have come out and talked about metaverse in terms of the potential. We're getting ready to go out to LA ahead of the Super Bowl.
For real, not in the metaverse.
Not in the metaverse.
We're going for real.
We're getting on a plane. We're going to have, And what's interesting is we're going to be talking with athletes, team owners, everybody and anybody, people who are involved with Amazon Sports, ESPN, you name it. And the metaverse is part of that conversation, right? So people are trying to figure out kind of how it fits in. And so, I don't know, do you rule them out? Does it take some time? Is it a bit of a gamble? Perhaps.
I don't think you can rule them out. And if there's one company that is able to, have the war chest to spend on the metaverse, then it's certainly Facebook. You saw the loss that they took last quarter alone. in just investing on the metaverse.
Yeah.
It was huge.
Well, and I'm looking at some of the tweets that I put out. Throw in Instagram and WhatsApp figures, and Meta's daily average active users, actually grew from 2.81 billion to 2.82 billion users. Neither Meta-owned service is expected to shrink anytime soon. So, it's really important to kind of dig deeper into what is the Meta universe.
What is it?
Well, I'm just saying all that's Facebook.
Oh, yeah, I know.
There's a lot of moving parts, as you said, like the small business side and so on and so forth. So it's a great story. It's definitely one that we will continue to follow. In the meantime, following all things world and national news is our own Nancy Lyons. Nancy, where shall we begin?
Thanks, Carol. Well, President Biden is hosting Olaf Scholz, the new German chancellor, at the White House for the first time. The two leaders have been discussing the crisis in Ukraine. Russian troops, amassed along the border. Biden says he does want to get to know Scholz better.
I'm looking forward to us working closely together with you, and this year during Germany's presidency of the G7. Looking forward to that as well. So welcome, welcome, welcome.
Biden says they're working in lockstep to deter Russian aggression. They'll be holding a joint press conference momentarily. It is still unclear if Chinese tennis player Peng Shuai is doing all right, despite a controlled interview she gave to a French sports newspaper. She told the paper that concerns about her safety are the result of an enormous misunderstanding. She had previously accused a former high-ranking Chinese official of sexual abuse. In the interview that was published today, she walked back that story. IOC spokesman Mark Adams says the organization's president also met with Peng Shuai this weekend, but could not say whether she was speaking freely or under duress.
I'm not sure we're able as a sports organisation to make that call. I think the president was right in saying it shouldn't be for us to judge whether there should be an investigation or not.
Adams says the best thing to do is to read Peng Shuai's own words. 5 months after he resigned over a swirl of sexual harassment allegations, New York's former governor, Andrew Cuomo, is not ruling out another run for public office. He insists it's too soon to talk about it. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
And to the East Room of the White House we go, President Biden with German Chancellor Olaf Scholz.
One of the things that struck me was the shared values and that shape how each of us approaches leadership. Among them, the foundational commitment to the dignity of workers and the need to treat all people with respect. So I enjoyed speaking with you, Olaf, and I know working together will continue to strengthen and deepen our alliance and the extensive partnership between Germany and the United States. Of course, at the top of our agenda today was our united approach to deterring Russia's threats against Ukraine and the long-standing principles of rule-based international order. That's what we spent most of our time talking about. Germany and the United States, together with our allies and partners, are working closely together to pursue diplomatic resolutions of this situation. And diplomacy is the very best way forward for all sides, we both agree, including best for Russia, in our view. And we have made it very clear we're ready to continue talks in good faith with Russia. Germany has also been a leader in pushing de-escalation of tensions and encouraging dialogue through the Normandy format. But if Russia makes a choice to further invade Ukraine, we are jointly ready and all of NATO is ready. Today, the Chancellor and I discussed our close cooperation and developed a strong package of sanctions that are going to clearly demonstrate international resolve and impose swift and severe consequences if Russia violates Ukraine's sovereignty and its territorial integrity. And I want to thank Germany and all of our other partners in Eastern Europe, in the European Union, for their work in this united effort. We are in agreement that it cannot be business as usual if Russia further invades. We also discussed our shared commitment to NATO's Article 5 responsibilities and reassurance of our eastern flank allies. We're united in that as well. Already, the United States is sending troops to reinforce the alliance, and I want to thank the Chancellor of Germany for hosting additional U.S. forces and for the long-standing hospitality to our women and men in uniform. We also discussed the challenges we're facing to the international order from China, along with Russia and other competitors that are pursuing more illiberal futures. We've agreed that Germany and the United States will continue to work together to ensure that the rules and principles governing emerging technologies are geared to advance freedom of opportunity, not repression or authoritarianism. We also reaffirmed our commitment to completing the work of integrating the Western Balkans into the European institutions and to finally realize a Europe that is whole, free, and at peace. With Germany holding the presidency of the G7, we also talked about how that forum can harness the world's leading democracies to advance a robust agenda on global challenges, from ending the pandemic to addressing climate change. So the bottom line is this: whether as allies in NATO, partners through the European Union, as leaders of the G7, the G20, or through our strong bilateral relationship, Germany and the United States are close friends and reliable partners, and we can count on one another. There is no issue of global importance where Germany and the United States are not working together, strength to strength, and applying and amplifying our efforts together. So I want to thank you all for making the journey today, and I look forward to being the first of many opportunities we can spend together beginning this meeting and throughout the rest of the year and the rest of our terms. So thank you and welcome. The floor is yours, sir.
Schönen Dank.
Thank you very much. Good afternoon from my side as well. I'm very grateful that we had the opportunity to talk in much detail today, and that I was able to make my first official visit here, and that we also could talk about the important questions that we're dealing with today. We are in a very difficult situation, and it is a good thing that Joe and I were able to discuss what we need to do in this difficult context. Of course, there is a military threat in Ukraine, against Ukraine. We cannot remain silent on that. We see the number of Russian troops along the Ukrainian border, and that is a serious threat to European security. And this is why it is important that we act together, that we stand together, and that we do what is necessary together. It is important that all allies, the US and Germany, the transatlantic partnership between the US and Europe, NATO, say the same thing, speak with one voice, and do things together. And we made it very clear, if there was a military aggression against Ukraine, this will entail severe consequences that we agreed upon together, severe sanctions that we have worked on together. So there will be a high price for Russia. This is a very clear message. Everybody has understood it, and I think this message has been made clear again and again, so that even Russia has understood the message now. What is important is that we also intensively worked on preparing possible sanctions together. We don't want to start once there is a military aggression against Ukraine. We have prepared a reaction that will help us to react swiftly if needed, and we will do that. At the same time, it is important to use all diplomatic means we have, and I'm very glad about your great willingness to move forward together, especially the bilateral talks between the US and Russia. And of course, the talks that we have agreed upon within the NATO-Russia format. This is also important, also because Russia needs to understand that NATO stands together and that NATO is prepared. After so many years, there have not been any talks in this format, so it is a good sign that they are happening now. Of course, we have controversial debates there, but it is important that we talk. And the same is true for the OSCE, where we need to discuss about security in Europe. This is also a progress, as tiresome as it may be, and we have not yet reached any very substantial conclusions yet, but it is good to see that this format plays a role now. And the same is true for the talks between Ukraine, Russia, France, and Germany, the Normandy format. We have this format, but we haven't been able to really use it in a productive way over the last few years. So now we have come back to that format. We are are having tough discussions in that format, and that shows that there are ways that will lead us out of this difficult situation. And this dual-track approach of clear announcements with regard to sanctions that will be taken if there is a military aggression, and at the same time keeping all dialogue formats open, I think this is the most promising strategy one can have, and that is what we're doing together, and we stand side by side in this approach. We also talked about many other topics that are important for us today, especially when it comes to the G7 presidency of the Federal Republic of Germany. We will work closely as strong economies, strong democracies, and we also, therefore, have a special mandate to contribute to cohesion worldwide. And part of this is that we continue to do everything we can to make sure that the citizens of the world can be vaccinated, not only in our rich countries, but also in countries where people would love to have the vaccine but don't have access yet. And these are initiatives that we have carried out together and that are of utmost importance worldwide. The same is true for fighting man-made climate change, a big topic that keeps us all busy, even though it is obvious that only a global solution can be successful, because climate is a global thing. It doesn't stop at national borders. As an industrialized nations, we have an important contribution to make. We have technological opportunities, economic opportunities, and have to use them in order to prepare a situation where we and others can enjoy prosperity without harming the climate. This is the big challenge that we see, and that is of great importance to us. So this is why we want to work together on this strategy and use a climate club of like-minded people and partners. These are some of the topics we discussed, and once again, the personal discussion we had illustrates the excellent cooperation between our countries, the strong bond we have within our transatlantic partnership, and the fact that both countries can rely on each other.
Well, thank you very much. We'll now take a couple questions each. Reuters, Andrea, for you guys the first question.
Thank you, Mr. President, and thank you, Chancellor Scholz. Mr. President, I have wanted to ask you about this Nord Stream project that you've long opposed. You didn't mention it just now by name, nor did Chancellor Scholz. Did you receive assurances from Chancellor Scholz today that Germany will, in fact, pull the plug on this project if Russia invades Ukraine? And did you discuss what the definition of invasion could be? And then Chancellor Scholz, wenn ich Sie fragen darf.
If I may ask you, Chancellor Scholz, you said there was some strategic ambiguity that was needed in terms of sanctions. I just wanted to know whether the sanctions you are envisaging and the EU is working on, and the US as well, are already finished, finalized, or is there still work ongoing? And you're not really saying what the details are. Is that just an excuse for Germany maybe to not support the SWIFT measures?
The first question first. If Russia invades, that means tanks or troops crossing the border of Ukraine again. Then there will be no longer a Nord Stream 2. We will bring an end to it.
How will you do that exactly, since the project and control of the project is within Germany's control?
We will, I promise you, we'll be able to do it.
Thank you very much for your question. I want to be absolutely clear. We have intensively prepared everything to be ready with the necessary sanctions if there is a a military aggression against Ukraine. And this is necessary. It is necessary that we do this in advance so that Russia can clearly understand that these are far-reaching, severe measures. It is part of this process that we do not spell out everything in public, because Russia could understand that there might be even more to come. And at the same time, it is very clear we are well prepared with far-reaching measures. We will take these measures together with our allies, with our partners, with the US, and we will take all necessary steps. You can be sure that there won't be any measures in which we have a differing approach. We will act together, jointly.
This is a good idea to say to our American friends, we will be united, we will act together, and we will take all the necessary steps, and all the necessary steps will be done by all of us together.
Will you commit today to turning off and pulling the plug on Nord Stream 2? You didn't mention it, you haven't mentioned it.
As I already said, we are acting together. We are absolutely united, and we will not taking different steps. We will do the same steps, and they will be very, very hard to Russia, and they should understand.
You recognize someone now, Chancellor?
Herr Fischer.
Ja. Michael Fischer, dpa, vielen Dank. Herr Präsident, zuerst eine Frage.
Mr. President, one question to you. The US, over the last few years, have exported heavy weapons to Ukraine, and Germany excludes that, has only delivered 5,000 helmets to Ukraine. Don't you think that NATO should act unanimously in this respect? And Germany, as the strongest European NATO partner, should also deliver heavy weapons to Ukraine. And Ukraine has asked Germany to do so. And on Nord Stream 2, I would also like to ask, don't you think with regard to the threat posed by Russia, Germany should already rethink its position on Nord Stream 2? And the third question, if I may, over the last few days and weeks, there has been severe criticism from the US media and from Congress as well vis-à-vis Germany about the reliability of Germany as an ally. This has been called into question. Do you understand this criticism? Is Germany a reliable partner from your point of view? And Mr. Chancellor, also a question to you, Nord Stream 2. You said all options are on the table. You're not mentioning Nord Stream 2 by name. Don't you think if you were to spell this out, you could win back trust as a strong ally here for the US?
There's no need to win back trust. He has the complete trust of the United States. Germany is one of our most important allies in the world. There is no doubt about Germany's partnership with the United States, none. With regard to helping Ukraine, one of the largest contributors financially to Ukraine has been Germany. Germany has been in the forefront of making sure of providing economic assistance. You also asked the question, you asked so many, I can't remember them all, but in terms of the U.S. media saying Germany is not reliable, Germany's completely reliable, completely, totally, thoroughly reliable. I have no doubt about Germany at all.
We are
united, and the transatlantic partnership between Germany and the US is one of the permanent pillars of German policy, and it will be relevant in the future as well, just as relevant. And this will be one of our top priorities always. On behalf of NATO, we are the country in continental Europe that is making the largest contribution, financial means and also military power. And we are the country that contributes a great share. We don't fully agree with the US, who pays the biggest part of financial support to Ukraine. So since 2014, about $2 billion direct bilateral support, and within the EU, an additional $3.8 billion that is made available. So substantial financial means to stabilize the Ukrainian economy, and we're willing to continue with that sort of contribution. So this is the very strong and unbreakable friendship between our two countries. Part of this is that with regard to the difficult situation at the Ukrainian border due to the Russian troops, we have made it very clear we will unanimously act in terms of sanctions. Mr. President, once again, a question with regards to arms exports. Do you think it is okay that NATO partners have different approaches here? And on Nord Stream 2, once again, do you think the current positioning of Germany with regard to the Russian threat is okay?
Look, there is no doubt in America's mind that Germany is an incredibly reliable ally and one of the leading physical powers in NATO, number one. Number two, the notion that Nord Stream 2 would go forward with an invasion by the Russians is just not going to happen. Now, Wall Street Journal, Sabrina?
Thank you, Mr. President. Based on everything you know now, do you think that President Putin will authorize an invasion of Ukraine before the end of the winter? And what is your message to the roughly 30,000 Americans who are currently in Ukraine? Do you think that they should leave the country?
Well, I've had numerous discussions with the Russians, and particularly with Putin. I don't know that he's even made it. I don't know that he knows what he's going to do. And I think he has to realize that it would be a gigantic mistake for him to move on Ukraine. The impact on Europe and the rest of the world would be devastating, and he would pay a heavy price. I have been very, very straightforward and blunt with President Putin, both on the phone and in person. We will impose the most severe sanctions that have ever been imposed, economic sanctions. And there will be a lot to pay for that down the road. It will affect others as well. It will affect us somewhat, it will affect Europeans, but it will have profound impact on his economy. And but I don't know. I know that he's in a position now to be able to invade, almost assuming that the ground is frozen above Kyiv. He has the capacity to do that. What he's going to do, I don't know. And I don't think anybody knows but him.
To the Americans who are currently in Ukraine, should they leave the country?
I think it'd be wise to leave the country. I'm not talking about our diplomatic corps. I'm talking about Americans who are there. I hate to see them get caught in a crossfire if, in fact, they did invade. And there's no need for that. And if I were if I had anyone there, I'd say leave.
And to Chancellor Scholz, can you outline specific steps that Germany is taking to reduce its energy dependence on Russia? And what do you say to those who suggest that German reliance on Russian gas is limiting Europe's options for how to respond to the crisis in Ukraine?
Thank you very much for raising that question, because it gives me the opportunity to address a topic that's important to me. One good news, maybe, within its strategy on fighting man-made climate change, Germany has decided in a very short period of time to phase out of the use of oil and gas by very soon. And by 2045, Germany will have a carbon-neutral economy as one of the strongest economies of the world. And with regard to these energies, we often think about heating at home and driving a car, but we're talking about industrial production, producing steel, chemical substances, cement, and changing these industrial processes and reorganizing such systems is what we have planned. So this year we will continue to take far-reaching decisions that will help us to use more wind energy, offshore wind energy, onshore wind energy, and solar energy, and expand the capacities, expand the grids, and have a strategy for Germany, but also worldwide, on the use of hydrogen, which is a central element for us to change our industrial processes that are using oil and gas right now. The industry is willing to be on board. We're doing this together with them, but it will probably be the biggest industrial modernization project in Germany in 100 years, with very good prospects that we will develop new technologies that other partners in the world can use as well. And this will help us fight climate change. And by the way, the energy mix today, we are talking about 1/4 of our energy that is linked to gas. And only part of that gas comes from Russia. A big part comes from Norway or the Netherlands. And of course, it is very important to us that we develop an infrastructure that will give us the opportunity to have all options available and react if needed. So you don't have to be concerned. There are some who should be concerned, who see themselves maybe too much as a deliverer of such resources. Because we are focusing on renewable energies, we will go down that path and make sure that this is the profitable future.
Also, Herr Rinke.
Mr. Rinken. Mr. President, I would like to ask you a question about LNG. Germany and Europe are much more dependent on Russian gas than other regions of the world. And you promised European allies to help with LNG. But this resource is more expensive. It's not available in the volumes that might be needed to replace Russian gas. And I would like to know from you how you would help Europeans in case of a conflict with Russia. Is this an empty promise, or what can you really do? What can you offer? And in addition, the U.S. are buying oil from Russia worth billions of dollars, and I would like to know whether these transfers are also part of the sanctions package against Russia. And Mr. Chancellor, liquefied natural gas, there is a big controversy in Germany about fracking gas. And how far is LNG even a real replacement, or is it also with a view to the climate club you intend to found? Is it really an alternative to Russian pipeline gas?
Well, let me respond. First of all, we are looking at opportunities to make up for lost gas, LNG, from Russia. We're underway of trying to see what we can do to do that, and dealing with our friends around the world as well. We think we could make up a significant portion of it that would be lost. But you know, what everybody forgets here is Russia needs to be able to sell that gas and sell that oil. Russia relies, a significant part of Russia's budget, it's the only thing they really have to export. And if in fact it's cut off, then they're going to be hurt very badly as well. And it's of consequence to them as well. This is not just a one-way street. And so we are looking at what we could do to help compensate for immediate loss of gas in Europe if it occurs. And that's what we've been working on for some time now.
I can confirm that we work closely with the United States of America, and Joe Biden and I are working closely together as well. We are prepared for all kinds of situations, and that's part of what we do when we say we prepare sanctions. That means we need to be able to react at any time, and this is happening. With regard to the use of LNG, I can say that the biggest volume of LNG used across the world is gas, and that is part of the debate. Concerning a long-term perspective, I already outlined what this is about. We will modernize our economy, and where gas is being used, we will switch to hydrogen. This will be a process that will happen faster than many might imagine today, and that will create a bright future for all of us.
Thank you. Thank you very much. Appreciate it. Yes.
Given that there are 100,000.
The answer is yes.
All right. A joint press conference between President Biden and German Chancellor Olaf Scholz. They were in the East Room of the White House. And obviously, the majority of their press conference dealing with the increased tensions and moves that we have seen by Russian forces along that Ukrainian border. What's interesting and certainly pertinent to our Bloomberg audience is President Biden says that if Russia indeed invades Ukraine, there will no longer be Nord Stream 2. This is this massive pipeline that really connects Russia to Europe and is really crucial in terms of getting nat gas out to Europe. So that's a big deal.
It is. I am just going over some headlines here, Carol. No doubt about Germany's partnership with the U.S. President Biden said, no doubt that Germany is a reliable partner. The president also said that Putin, would pay, quote, heavy price for any invasion, and did reiterate that it would be wise for Americans who are in Ukraine to leave.
Yeah, exactly. But it did seem that the two of them talking about the unified relationship, if you will, between the United States and Germany, certainly that was questioned by some members of the press community. But the president saying, as you said, no doubt about the Germany partnership with the United States. So unified against Russia.
Hey, I want to get to a headline now that just crossed the Bloomberg terminal. Peter Thiel is planning to leave the board of Meta, the parent company of Facebook, to pursue Trump's political agenda. Peter Thiel was a very early backer of Mark Zuckerberg. So certainly a big deal that he's leaving the board.
Yeah, that's pretty interesting. And it certainly sparks conversations and questions about what is the Trump political agenda going forward? In what universe? Is it in the political world or is it in the media world or a little bit of both? All right, let's remind everybody that we indeed have seen the markets close on this first trading day of the week. It's going to be another week full of economic data, including a read on inflation. In terms of the closing numbers, S&P finishing down 17 points, the Dow up just 1 point, and the NASDAQ down about 82 points, finishing just off their lows of the session, those major equity averages.
Yeah, but for the Dow, not moving enough to have any sort of impact on the percentage change. It's finishing unchanged for the day.
Yeah.
Not something you see every day, Carol.
No, but
I don't know. It's interesting to me.
It's been moving around a little bit, but definitely off its best levels of the session. So let's get to it with Alan Zafran, founding partner and co-CEO of IEQ Capital, on the phone from Foster City, California. Hey, Alan, nice to have you back. Thanks for your patience as we awaited just listening to that press conference from the White House. So what are the key things that you are thinking about in terms of this market environment?
Carol and Tim, hi.
Hi.
Another news-filled day.
Yeah.
Markets focus on long-term fundamentals, and we can all get shaken by short-term headlines and geopolitical risks and one-off earnings disappointments or price increases and move stocks to the upside, like in the case of Amazon. You just can't get shaken. I mean, if you want to take a geopolitical lens for a minute, because we just heard from President Biden, America still dominates, and that gets expressed in the financial markets. U.S. markets still trade at 21 times earnings. The euro market trades about 18 times earnings or less, as does Japan's market. So, and Russia's trades at single digits. So that's telling you something. And if you look at a bigger lens, in the long run, technological transformation is going to continue to lead to productivity changes, which leads to wealth creation, which leads to better outcomes in the long run for owners of companies. And that's what stocks constitute. But you have to ride all the crazy chaos of tightening Fed cycles and geopolitical risks along the way. That's the price for the higher potential return.
So, Alan, have you made any changes in 2022 to your outlook? Because we have spoken several times in the last few months, and I'm wondering, given the choppiness between last time we spoke with you and what we're seeing right now, have you changed your strategy at all?
Good question. The answer is no, but I encourage people to take a much longer-term perspective, and I think it's different if you're a day trader, right? It's very clear that you're in the midst of a transition, at least to some extent, from a liquidity-driven easing cycle to what's now going to be a tightening cycle, and it's always going to be choppy. But I do believe the market is overly draconian, overly hawkish, overly tilted towards an out-of-control spiraling inflation problem, which is not going to take place. I think there's going to be clear evidence as we head into the second half of this year that the inflationary pressures are dissipating. I can give you all kinds of reasons why. Even if you want to tell me things like the U.S. employment wage rates going up at 4% are problematic, got to remember labor productivity growth is trying to get 2%. That's really only a 2% core inflation rate. And you're going to have what's called the base effect. So as we move month over month, which will compare year over year, inflation on the margin will decelerate. Supply chains will get unbroken. And you will see that the pressures on a lot of these prices will begin to dissipate. And all the concerns about as many as 5, 6, 7 rate hikes this year will prove to be too pessimistic. And so that is really what creates the buying opportunity here.
Right.
Buy the high quality companies.
But timing is tricky, and we've talked about timing is tricky certainly for the Federal Reserve. There's a lot of pressure on them to do something. Many would say that they're already behind the times when it comes to raising rates to rein in inflation. We're going to get a very hot print on CPI this week. But having said that, as you say, and anybody who's a student of economics understands that, you know, we know why the supply chains are so out of whack. We understand that. And the question is, when do they right themselves? The expectation is they will go back to normal, so there aren't so much pressure, price pressures. But having said that, Alan, like we're talking about these Amazon stories and these other stories of people, you know, companies that are raising wages that are going to be sticky. And so you do wonder what impact that might have longer term.
Well, it does tell you that you're going to have, in the short run, some margin compression. You're seeing several companies signal that.
Right.
You have to realize that COVID really, in a way, was another form of a war, if you will. And in times of war, you get temporary inflationary spikes, but they end up in a stagflation environment on the back end of that. I don't think this is any different. I think what's going to happen is on the back end of this, you're going to see clearly that you're already seeing things like port delays along the West Coast are declining sharply. Delivery times are accelerating. Order backlogs are increasing. Inventories are building too quickly. Prices, CADE indices are starting to drop. There's actually signs already that a lot of these inflationary pressures are beginning to dissipate. And so the wage pressures will be offset by productivity increases, technological advances, and on the back end of this, companies will readjust. And so I think you still have to look at high-quality franchises that can pass the price increases or the cost increases of their components in the short run off to their consumers. In the long run, they're going to benefit when the other price pressures dissipate again. That's where you want to focus.
Alan, year-over-year CPI is set to be 7.3%. We're going to get that on Thursday. That's what economists are surveyed by Bloomberg are anticipating. When does inflation peak?
I think it peaks by spring at the latest of this year.
So we are...
Okay. You're not that far away.
That's some good news.
So then...
The problem is between now and then in a tightening Fed cycle and a geopolitical uncertainty, you know, stocks are going to be wobbly for a while.
Right. Exactly. Although we've done all...
What's going to happen?
Well, so, okay, and just got about 45 seconds left here, Alan. So for those who are thinking about, I mean, there's a lot of stocks that are a lot cheaper than they were certainly at the end of last year. Where do you put, I always like to ask, where do you commit new money in this environment? And just got about 35, 40 seconds.
I am committing money to companies that can still grow in a slowing growth environment because the rate of economic growth is going to decelerate from here. And so you need to be in companies that are able to pass on cost increases and generate top-line revenue growth. And so that means they either have the ability to pass the cost increases on to the consumer, or they have a durable franchise with things like licensing, ways in which to pass on consistency and revenue, and it's not dependent on a slowing economy, which will become evident in the back half of this year.
Alan Zafran, founding partner and co-CEO at IEQ Capital, joining us on the phone from Foster City, California. Alan, always love having you joining us. Thank you so much for taking the time.
All right, let's get back to a check on the world of business and some of the news after the closing bell. Charlie, we did get some earnings and also a headline involving Peter Thiel.
Indeed. Let's begin with Peter Thiel because the tech investor who has advised Mark Zuckerberg for nearly 2 decades at Facebook parent Meta Platforms will be stepping down from the company's board after Meta's annual shareholder meeting in May. Thiel, who joined the board in 2005 after an early investment in Facebook, plans to increase his political support of former President Donald Trump's agenda during the 2022 election. Earnings, Amgen posted adjusted EPS that beat analyst expectations as it lowered selling and administrative costs, and its manufacturing revenue for making COVID-19 antibodies rose sharply. Stocks sold off in the final hour of trading. We had the Dow, the S&P, and NASDAQ all higher, but in the final hour, we had a mixed market with the Dow holding out with a 1-point gain. Both the S&P and NASDAQ declined. S&P was down 16 points today, a drop of 0.4%. NASDAQ tumbled 82, a drop there of 0.6%. And the 10-year yield, 1.92%, 10-year down 3/32. Spot gold up 0.7%, $18.21 the ounce. West Texas Intermediate crude down 0.9%. Natural gas lower today by 6.2%, 4.28 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, watching a lot. We are obviously, as Charlie mentioned, in the thick of earnings season, watching that story on Peter Thiel. And of course, it's going to be a busy week because of earnings and economic news and a lot of things. Let's not forget, though, Tim was staying up late last night because he watched the Olympics.
Just so you know, this is going to be a pattern for me. It's like I can't stop watching once I start, especially when they're
What
live.
do you do when we're on the West Coast?
You know what kills me?
Is that better?
It's better, yeah.
It is a
because
little bit
then
better,
it's earlier.
time-wise,
What it does, though, is it kills me. Getting the push alerts from news organizations that are like, so-and-so fell, or, you know.
You're like, wait, I want to watch it.
Yeah, anyway.
All right, well, our next guest is very familiar with the experience of the games, having medaled for Team USA in the 2018 games, earning a silver medal in bobsledding. And just this past week, Lauren Gibbs was named VP of Partnerships at Heroic Public Benefit Corporation. Tim, that's a social training platform that challenges the negative aspects of social media.
Lauren Gibbs is joining us now on the phone from Monterey, California. Lauren, how are you?
I am great. How are you?
Doing well, thanks. Hey, what's it like watching the Olympics right now from Monterey after you medaled in 2018?
So much harder than competing in them because just like you were talking about, it's watching my friends, you know, the last 4 years of their hard work, you know, on TV. And when things go great, you know, you want to be there to celebrate with them, but things don't go exactly as planned. You want to be there to support them, and it's so much easier to compete than it is to watch, hands down.
Well, and I always wonder what the process is, right? Like if you are an athlete and you came to it later than most, I think that's fair to say. You got an executive MBA, you were, you know, in the work world, in the corporate space, and then you tried out for the bobsled team on a whim. What's the whim? What is it? You wake up in the morning, you have a great cup of coffee, and you said, I'm going to go out for the bobsled team. How does that work?
Yeah, I tried it as a joke. A friend of mine suggested that I try out for the bobsled team, and I thought that was crazy, but I had also made a promise to myself to fully vet every opportunity that came to me. And so I was living in Denver at the time. I found out there were tryouts about an hour away at the Olympic Training Center. I didn't know there were centers dedicated to Olympians, so I thought, how cool would it be to just tour a center, buy a T-shirt, you know, maybe eat in the cafeteria so I can eat like an Olympian, and that would be it. And 8 years later, I'm a Olympic medalist, a world champion, you know, have made 8 national teams and, you know, basically traveled the world representing Team USA.
All right, but wait a minute. You don't just like walk up and be like, hey, this kind of wanted, I mean, what was it though? What was involved in the process? Did they just immediately say, come on?
Yeah, they just looked at me like, you. There's an initial combine where you do a sprint, a shot toss. So you take a shot put ball, heave it forward as far as you can, and you do a standing broad jump. And so, you know, I played volleyball in college. I went to Brown University, but also ran track. And so I've got that perfect mixture of explosiveness, speed, and strength that makes a good bobsledder. I tried out right after 2014, so I was lucky. A lot of the Olympians that had went to 2014 and medaled at Sochi had retired. And so it was a mix of timing and not realizing that I was made for bobsled. People asked me how I chose bobsled, and I said it definitely chose me. I don't think I chose it.
Okay,
Lauren,
sorry, we don't have too much time, and I want to make sure that we talk about Heroic as well. But I'm wondering how often, you know, you'd be with somebody who spent their whole life preparing for the Olympics, and they just like look at you and hear your story, and they're like, "Are you kidding me? Yeah. I've been doing this my whole life."
Come on, man! Like, how does this happen?
Yeah, my friends that are figure skaters for sure look at me like that. They started when they were 4.
Yeah, exactly.
All right, so tell us about Heroic and what it's all about and your involvement.
Yeah. Heroic is a social app that will launch April 9th. It's all about personal development. And our mission is to have help 51% of the population flourish by 2051. And we believe when people complete 10 virtuous targets a day, they'll be more energized, connected, and productive. And we're really trying to help people be the most heroic version of themselves. So obviously, as an athlete, this really speaks to who I am as a person. I feel like I've been very fortunate and have had a lot of opportunities, and I feel like Heroic is my opportunity to pay it forward to others, to give people the tools to see success in the things that they're passionate about.
What are some examples of those daily heroic activities?
You know, it's different for everybody. So things for me are like going to bed on time, right? Getting off of my my phone. Not to be on my phone all night, and making sure that I have a consistent bedtime. Drinking more water, making sure I'm prioritizing my nutrition. Especially now that I'm a retired athlete, you would think that, you know, it's easier to do. It's actually more difficult because now it's not tied to my athletic performance, but it's still tied to my performance as a human being. And so it's the little things that we do on a daily basis that move us closer to our goals or pull us further away. And we know that if you complete 10 virtuous targets a day, you'll be more connected, energized, and productive.
Can you talk about just very briefly the idea of these being small goals? Because that really stuck out to me. It's not that, you know, these huge goals like, okay, go to bed every night at 9:30 and really try to change yourself.
Because you hear 10 and you're like, wait, that's a lot.
Yeah, but these are small things. These are micro.
Just quickly, we got about 30 seconds. Yeah.
Yeah, it's just whatever small wins, right? It's like take a breath every minute to stop or stand up every 1,000 seconds to get a little bit more exercise. It's drink one more cup of water a day. It's have one more conversation a week with a loved one, things like that.
Well, it's like finding gratitude for things, right? And just it can change your sentiment, your psyche, and really your mental well-being. Really great to talk to you and wish you well with this and getting it out to others. Lauren Gibbs is VP of Partnership at Heroic. As we mentioned, U.S. Women's Bobsled Olympic silver medalist 2018. When I'm on a whim, like I have some ice cream. I don't know. What do you do when you're on a whim?
I don't know. I'm just like looking at watching the Olympics tonight.
I know.
That's what I'm thinking about.
Really impressive. All right, you're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, yeah, there's so much going on, and it's only Monday, Lemon. But right now, the most read story on the Bloomberg in the past 1 hour has to do with Peter Thiel.
Yeah, we got a great guest coming up to talk to us all about it.
No guest, he's family.
Yeah, he's family. Max Chafkin, he's the author of The Contrarian. Peter Thiel and Silicon Valley's Pursuit of Power. He's going to be chatting all about Peter Thiel, Facebook, Meta, Zuckerberg, and more in just a few minutes.
Adios, Facebook, Meta.
Yeah, that's right. He's leaving the board. That's the news. Did I bury the lead?
No, kind of.
Yeah, I did. Okay.
That's all right. Let's get over to Charlie Bellet. Hey, Charlie, where do you want to begin?
Well, hello there. I am going to begin with Meta because the stock fell 5.1%. Just want to recap if people are just tuning in right now. Tech investor Peter Thiel, who has advised Mark Zuckerberg for nearly 2 decades at Facebook parent Meta Platforms, will be stepping down from the company's board after Meta's annual shareholder meeting in May. Thiel, by the way, joined the board in 2005. After an early investment in Facebook, he plans to increase his political support of former President Donald Trump. The Dow, the S&P, NASDAQ finished mixed. If you tuned in during the early part of the final hour of trading, you would have heard me tell you stocks were higher across the board. Didn't end that way. Late day fade. The Dow finished with a 1-point gain, a loss for both the S&P and NASDAQ. S&P today down 16, dropped there of 0.4%. NASDAQ down 83, dropped there of 0.6%. 10-year yield 1.92%. Alan Zaffron is co-CEO at IEQ Capital, and right here on Bloomberg Business Week, he told us you got to focus on the big picture.
It's very clear that you're in the midst of a transition, at least to some extent, from a liquidity-driven easing cycle to what's now going to be a tightening cycle, and it's always going to be choppy. But I do believe the market is overly draconian, overly hawkish, overly tilted towards an out-of-control spiraling inflation problem, which is not going to take place.
Alan Zaffron of IEQ Capital. Amgen posted adjusted earnings that beat analyst expectations as it lowered selling and administrative costs, and its manufacturing revenue for making COVID-19 antibodies rose sharply. Again, that 10-year yield, 1.92%. Spot gold up 0.7%, $18.21 the ounce. A retreat for crude down 0.8%, $91.62 a barrel. Natural gas today dropping by 6.5%, $4.27 per million BTUs. So again, recapping, mixed Monday with the S&P down 0.4%, NASDAQ down 0.6%. The Dow essentially unchanged on the day, up by 1 point. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's get to it. The most read story on the Bloomberg in the past hour. Peter Thiel, the tech investor and conservative provocateur who has advised Mark Zuckerberg for nearly 2 decades at Facebook parent Meta Platforms, stepping down from the company's board after Meta's annual shareholding meeting in May. So he's there for a few more months.
Yeah, he is. Well, joining us now is Max Chafkin, the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He's also our colleague here at Bloomberg. Max, when you saw this, were you surprised?
No, I mean, this has been something that I think has been simmering, kind of on the background of everything that's happened with Facebook over the last couple of years. There's been a lot of tension between Thiel and Mark Zuckerberg, really dating back to the election of Donald Trump, and it's especially intensified over the last year. On the other hand, it's a surprise in that Thiel has been, one of the earliest and most important backers and a real mentor to Mark Zuckerberg. So although there's been tension of late, they have this very close relationship. So seeing him, leave the board of Meta, formerly Facebook, it feels like the end of an era.
Is it problematic for Mark Zuckerberg, who might need a mentor around right now?
Well, I think that he's probably a bit relieved and also probably a bit concerned. I mean, on one hand, obviously, it's a difficult time for the company. Their stock just plummeted. It's not clear where they're going. This is not the time where you want a lot of turmoil at the board level, especially politicized turmoil, which is what this is. On the other hand, Thiel's political activities have become such a kind of distraction to Facebook and to the discussion around Facebook that it feels like it's almost inevitable. He's back in these 2 Senate candidates with tens of millions of dollars, and they've really turned Facebook into a kind of adversary. You know, J.D. Vance, the senator from Ohio, Thiel has a PAC that's supporting him. The PAC ran an ad last year that basically, flashed Mark Zuckerberg's face on the screen and called him, an elite who was, I'm paraphrasing, trying to hurt America. So it's really hard to see how that lasts, and how Thiel could continue to be playing this extremely active role in right-wing politics and also be, a productive board member.
So I think a lot of people became familiar with Peter Thiel's politics at during the 2016 election when he spoke at the RNC. What has he done since then politically, and how does that indicate where he's going to continue to spend time now?
So Thiel was a kind of an important player in the early days of the Trump administration. He was part of what I think back then we were calling kind of the alt-right faction of Trump world, this kind of young activist, and at times, pretty out there, part of the Trump administration. He was on the transition team, and basically he left pretty early, right around the same time that Steve Bannon left. Since then, Thiel has been a little bit quieter, but what he's been doing over the last couple of years is kind of establishing himself as this patron to, the Trumpist movement. So not necessarily Donald Trump, who he hasn't donated to, in recent years, but to the kind of political candidates that are trying to kind of drift or get in Trump's slipstream and run as, we're going to continue this movement. And that's kind of what Thiel's talking about in the statement that, was shared with Bloomberg News. A person familiar with, his thinking is talking about basically wanting to advance this agenda. So not necessarily support Trump, but support this kind of political movement.
Yeah, well, that's what I want to, what is the relationship between Peter Thiel and Donald Trump?
Well, I mean, Thiel has moved to Florida, so maybe he's a little bit closer to the former president, and they've definitely been in each other's orbits. I think Thiel's relationship to Trump is really similar to a lot of people, on the right, where he feels like Trump is this kind of important political force. He's this person who you kind of you just have to follow, even if it's not necessarily exactly what you believe. Right. But I think what Thiel does recognize and does agree with Trump on a lot of substance. I think where the disagreement is more on sort of Trump's, kind of method of speaking, his reliability, many of the things that you sometimes hear from people who criticize the former president. So I think from Thiel's point of view, he's a supporter of Trump, but he's also, in the camp of somebody like Ron DeSantis, right, who could, if Trump doesn't run, could be a possible Republican presidential candidate and who has kind of that Trumpist vibe while not quite being Trump.
It's pretty extreme in some cases because the former president doesn't believe that Joe Biden was democratically elected president. And I'm wondering how, somebody like Thiel, a real, academic, thinks about that. We only have about 30 seconds.
Yeah, and I think this is part of the reason he's leaving the board. Thiel is, very much casting his lot with the faction of the Republican Party that thinks the election was stolen. Blake Masters is running, on the grounds that basically the election was stolen and that Facebook played a part in it. We're seeing Thiel support Liz Cheney's opponent. Liz Cheney, of course, was one of the few Republicans to vote to impeach President Trump. So he's definitely casting his lot with that part of the Republican Party. And yeah, it's pretty extreme.
Just when you think you can't be surprised. Yeah. Like a headline like that crosses. Max Chafkin, thank you so much. He's written about Peter Thiel, the contrarian, so be sure to check that out as well.
Let's head to Washington, D.C. for a check of the latest world and national news. Hey, Nancy Lyons.
Thanks, Tim. President Biden says Germany is a reliable partner as the world waits to see what Russia does concerning Ukraine.
Germany and the United States, together with our allies and partners, are working closely together to pursue diplomatic resolutions of this situation. And diplomacy is the very best way forward for all sides, we both agree, including best for Russia, in our view.
President Biden has been holding discussions this afternoon with German Chancellor Olaf Scholz, who says the two nations stand together. Scholz speaks here through an interpreter.
We have prepared a reaction that will help us to react swiftly if needed.
Scholz also pushed for diplomacy in hopes of preventing an invasion. President Biden says if Russia does move on Ukraine with tanks and troops, the Nord Stream 2 pipeline will be abandoned. The House has unveiled a stopgap spending package that would extend government funding until March 11th, and it plans to bring the measure to the floor tomorrow. Lawmakers say it gives them more time to discuss a $1.5 trillion appropriations package. The IRS says it will stop using facial recognition technology to authenticate people who create online accounts. This after the practice came under criticism from privacy advocates and lawmakers. Critics of the software say the database could become a target for cyber threats, and they also voiced concern about how the information could be used by other government agencies. The IRS commissioner says the agency is pursuing other options that do not involve facial recognition. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Massar along with Tim Stenovic in our Interactive Broker studio. And one story we do want to bring your attention to, a lot going on this Monday. Apollo Global Management's private equity arm plans to increase spending on minority and women-owned businesses across all of its portfolio companies. So looking to spend, Tim, more than $1 billion on diverse-owned suppliers and service providers by 2024. They put this out in an email statement today.
Yeah, here's what Carletta Uden, the head of ESG efforts for the private equity unit, which is worth $86 billion. She said, quote, "We recognize this is only the beginning, and we look forward to continuing to build out our expertise and impact across our companies, firm, and ultimately our industry."
Yeah, it's interesting. And we are seeing, various, BlackRock has come out at times when it comes to ESG, and just talking about the importance of when it comes to diversity and inclusion, you really need to commit money, and you need to think about not just maybe some of the big names, but the supply chain to really build this out.
Apollo says it believes its portfolio companies can reach thousands of diverse-owned businesses by making changes to its supply chain. It's reviewing procurement practices as part of due diligence. This is private equity co-heads Matt Nord and David Sambers said in the statement.
Yeah, initiative coming under CEO Mark Rowan. He took over last year, you might recall, from Leon Black. He stepped down in the wake of the upheaval caused by his business ties with convicted sex offender Jeffrey Epstein. Black now embroiled in a bitter legal fight with Josh Harris, accusing his fellow founder of organizing a coup in a failed attempt to seize control of the firm. There is a lot going on. It's almost like real-life Succession.
Yeah, I think we're going to see more statements like this come from companies. I mean, even today, you had a company like Spotify come out in the wake of what's happening with Joe Rogan and say that they're going to spend $100 million on content from underrepresented groups. Which I think raised a lot of eyebrows, considering that $100 million is the widely reported figure for Joe Rogan's contract.
Right. Well, and, customers, clients, people are demanding more of the companies that they use, whether it's services or goods, and investors equally are demanding that same accountability on a lot of different metrics. All right, you're listening to Bloomberg Business Week. Carol Massar, along with Tim Stenovic, we're going to check in with a small business owner with an interesting past. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Take-Two Interactive shares lower now by almost 3%. It offered a forecast for revenue in the current quarter that missed analyst estimates, signaling that the ongoing success of its Grand Theft Auto franchise is not enough to outweigh a thin slate of new titles. Amgen posted adjusted earnings that did beat analyst expectations as it lowered selling and administrative costs, and its manufacturing revenue from making COVID-19 antibodies rose sharply. After hours, Amgen shares, they are now unchanged. Tech investor Peter Thiel, who has advised Mark Zuckerberg for nearly 2 decades at Facebook parent Meta Platforms, will be stepping down from the company's board after Meta's annual shareholder meeting in May. Thiel joined the board in 2005 after an early investment in Facebook. He plans to increase his political support of former President Donald Trump's agenda during the 2022 election. Stocks ended the day mixed. We had a late-day fade for technology names. The S&P was down 16, down 0.4. NASDAQ dropped 82 points, down 0.6%. The Dow held on to a 1-point gain. 10-year yield 1.91%. Spot gold up 0.7, $18.20 the ounce, while West Texas Intermediate crude oil was down 0.8%, $91.60 a barrel on West Texas Intermediate crude. Again, recapping, S&P down 16, a drop there of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, our next guest is a small business owner, a performer, and her family history takes us to one of the most troubled times as a nation. Let's bring in Kiwa Nurullah. She's owner of the children's clothing and toy boutique Kiddo, which I love the name, located in Chicago. She's also a fourth-generation descendant of Black Wall Street. Her great-grandfather running a tailor shop in the Greenwood district of Tulsa. His business destroyed in the massacre. He and his family, though, did survive. She's also, by the way, a singer. She's toured with the likes of Quincy Jones and a few others. She joins us on the phone in Chicago. Kiwa, Tim and I have been really looking forward to talking with you. How are you?
I'm good. Thanks for having me.
Well, thank you for joining us. First of all, talk to us about the past couple of years and running a small business during the pandemic. What's it been like?
It's been crazy.
To say the least, right?
Yeah, it has. We had about a year and a half before the pandemic hit. Our storefront opened in 2018. And yeah, since 2020, it's just been a roller coaster of events, of, COVID, the civil unrest. And so I found myself having to be very nimble.
Well, I'm wondering,
and go with the flow.
I'm wondering if that nimbleness included a pivot to e-commerce away from this experiential in-store element that you get when you visit the storefront in Chicago.
So we were one of the lucky ones. We started out online in 2016. So we had 2 years of doing just that. So when we kind of had to revert back to that in 2020, thankfully, we didn't have to start from scratch.
Well, and I feel like as a small business owner, what did you learn, like going through the process? What has changed in terms of how you approach running your business?
What I've learned really is that families need more in this time because we're the ones who, still have children who can't be vaccinated. We're the ones who are still spending probably the most time at home. And so I've really tried to listen to my families, to my consumers. What do you need? What are your kids looking for? Because that turnover rate for toys and books is so much faster now that we're not doing all of the outings and events and things. So I've really just kept my ears wide open to listen to families because they will buy because we're in need even more since we're spending so much time at home.
So give us some examples of toys that you've stocked or changes that you've had to make as a result of the way that we have to be during the pandemic and hopefully not for much longer.
Well, first off, we started as just an apparel company. So we're making tees and onesies, cute, fun ideas. And so we opened the shop, and in 2020, we filled out the shop with toys and books and lots of other things. But in 2020, when people were sheltering in place, guess what? They weren't buying new fun clothes for their kids because we were wearing pajamas all day. So immediately I looked at that and I said, okay, whoa, with my clothing orders, let's dial that all the way back. And we amped up, games, toys, puzzles, and those kind of things that were getting used while we were at home.
Yeah, I know, right? Like, talk about having to really, understand what, right? Like, what customers were buying. Because it's interesting. I think we thought nobody was going to buy anything. And then, no, we just shifted our focus, whether it was buying out our home or our pets, right? Or games. You say a lot and you talk a lot about families needing more during this time. And you have a family history that we'd love to just ask you about. I mean, have you always known your family history and what happened in Tulsa and what happened with your great-grandfather, who did make it out all right, but obviously it was devastating?
Yeah, so what's interesting is that we always knew about our family history, but as a child, I never knew that it was important because no one else knew about it. So it's really intriguing, when I think about these memories and my grandfather kind of talking about it, and I didn't know that it was of national relevance, of even, international relevance. And so not really until 3 or 4 years ago, when you have people really amplifying this event and what happened, and I'm like, oh, wait, like, this is kind of a big deal. I never learned about this history in grammar school, in high school, in college. And so all of a sudden in adulthood, you have all of these people kind of catching on. And then I'm like, oh, wait, like my family kind of is special, or this was important,
Really, really important. And I think all of us were like, wait a minute, what history was I taught? And we realized it wasn't comprehensive. It wasn't really full. And why do you think this history has not come out sooner? More broadly.
No,
I'm not trying to be like I think
I know.
These are conversations, right, that I think are important for us to understand more fully our world, I hope.
Yeah, I think, it's the American dream, frankly. You can't really sell the full American dream if the people buying it, know that sometimes that's not what happened. You had Greenwoods all over the country. You had Black communities that were living their dream, and those dreams were shattered. So we can't really continue this narrative of come to America and you can, be whoever you want to be and do whatever you want to do, when we have this kind of dark history that's not getting told. And that really is the reason it's not getting told. But I'm glad that now it is.
Yeah.
We talk a lot about venture capital on the show, and the idea that venture capital funding overwhelmingly goes to white men. And there's this opportunity gap when it comes to entrepreneurship in this country. Kiwa, how do we close the opportunity gap?
Oh, wow. I think that it's all about access. I think that, when Black businesses are getting discriminated against, even just applying for the smallest bank loan, well, then, of course, we're not thinking about getting millions from investors. It kind of starts at that ground level. Like, if that faith is shown with Black businesses, from the ground up, if we're kind of given the same consideration as other businesses along the way, then yeah, when we have that $1 million idea, we will not be intimidated by getting the money to back that idea. But I think when you experience so much discrimination, it's hard to have that confidence in your product that you can have this whole system of people behind you.
Right. There's just so many times you can maybe hear no or something and keep at it. But you've kept at it, and I hope you'll come back and update us on what you're doing. Kiwa Norala, the owner of Kiddo, on the phone from Chicago. Have a good evening, everybody.